All right. Good morning, good afternoon, possibly good evening, depending upon what time zone you're joining us from. This is Don Kaufman. I'm just realizing I'm looking at my trading application right now and not the slide deck. It's okay. So welcome everybody. If you hear me all right, please feel free to chat in. It's under the either webinar chat or the question and answer in here. Um, yeah, no, I encourage you guys chat in. Let us know where you're joining us from. Just the city, state, country. All right, latitude, longitude. Hey, whatever does it for you. Put your coordinates in. So excellent. Um, let's make sure everybody's good to go. Just doing a quick heads up over there, and then we'll get off and rolling here. So a few informal things. Fantastic. A couple people joining us from the UK. I'll even throw the camera on. So welcome. I am. I'll actually be broadcasting from Paradise Valley in Arizona. I'm off the island for a couple more weeks. So it's freezing here too. It's ridiculous. It's in the 50s. I can't take it anymore. For those of you that do not know this, we live full time now in the U.S. Virgin Islands in St. Croix. So going anywhere that's like less than like 75 degrees is very cold. I know that sounds terrible, given the fact that some of you are, well, in Toronto. As I say that, yeah, no, I hear the weather in Toronto is lovely this time of year. So a few informal things. It's good. You guys can hear me. You can see me. This is good. Yeah, under 60. I like that. Under 60 is unbearable. No, I'm like legit. I've been cold and I lived in some really cold weather before. I grew up in New York, spent a whole lot of time in Chicago when I worked in Chicago, but it's it's a little different when you spend like literally 2 years on an island, come off the island, you're like, what is this? There's weather. It's horrible, I tell you. So those informalities. Number one, you guys can ask questions throughout the course of the day. Okay. Oh, that's awesome. Somebody's actually coming in from Saskatchewan, the frozen tundra. Okay. The most exciting thing there. Okay. A moose. Not this time of the year. Anyway, you guys can ask questions. People always ask me that, like, can I ask questions throughout the course of this? Yes, I'm reading it in real time. By the way, if you see me looking around, I have a screen here, 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 here. I have 6 different screens. So I'm constantly fishing around for some screens over here. So ask questions. The other question that always comes up is this live? Yeah, it's live. This is the market right now. We have FOMC minutes coming out in about 2 hours. So it's on right now. It's a pretty wild market. I mean, to start the year, starting off the year in some pretty serious volatility. Here's the funny irony is, if you look at all the volatility, that line that's right through the middle of your screen, that's actually where the week started. This is where yesterday started. We shot up, sold off, came back, down, up. Where are we right now? We're massively unchanged. That's volatility though to kick off the year. So with that, we're going to jump right into it here. Now I'm going to move at a pretty good clip. Oh, cool, somebody actually knows. Wow, I got coordinates. That is awesome. Coordinates. Somebody else worked in St. Croix. Cool. You actually worked at the refinery. All right. With that, welcome everybody. My name is Don Kaufman. I'll be with you, your host, your trader, throughout the course of today. We're going to be talking about Ultima trades. Ultima trades is something we have just been emphatic about now for over 2 years, and plain and simple, it's because it works. And that's what we talk about here at TheoTrade, what works. Right off the bat, again, Ultima trades, the high probability income generator. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. We founded TheoTrade in 2016. I'll talk a little bit about my background, but I spent 15 years in the brokerage world. Before that was kind of the market making world in Chicago. Here's a risk disclosure: no soliciting, no recording, no feeding the monkeys. I don't know. I throw the risk disclosure because I'm no longer a financial advisor nor a broker dealer. A few housekeeping items. Listen, this is a skill set, and I'm going to move at a pretty good clip. There's not a lot of fluff in today's presentation. There's a lot of meat, and if you've actually tuned in, now listen, we've been talking about Ultima, literally, people, for over 2 years. And if you've tuned in some of the presentations we've done on Ultima, there are some aspects that will be similar to other Ultima presentations, but this Ultima presentation, I just keep morphing it and changing it, adding to it. We're going to go at a pretty good clip today, as I always say. If you are brand new, okay, just listen. Big concepts is what you want to grasp if you're brand new. By the way, speaking of which, got a pretty good number of people on right now. How many people here are brand new, have no idea what a TheoTrade or a Don Kaufman happen to be? Anybody here? Okay, brand new, just, yes, no, maybe so. Okay, Y for yes, N for no. By the way, this is an interactive session. Get in there and start typing stuff in. It's no fun if you just sit there and do nothing the entire time. I like to do these during, the markets. Like I like to do it while the market's open. Some people do webinars at night. How dynamic is that? Like we're going to do some trading maybe here today. We'll see if we can execute into some trades. But I'm going to tell you right now, as I say, I move at a pretty good clip. Shut the door, turn off Skype chat, whatever else is distracting you. Focus, people. Kick out the grandkids, kick out the kids. The dog can stay. The dog can stay. All I'm saying is you took the time to be here. I'm serious. Focus on being here because I try to really, embed a lot of logic, and a lot of trade talk to you. This is what works in volatility. Next in the docket here, this is our gift to you. Again, our gift to you. And it's important you guys see this. So I use the auto expected move indicator constantly, like incessantly. We'll give you a copy of this. It's a $500 value. The reason is because I refer to it all the time, and I just want everybody to have a copy of it because I refer to it all the time when I do evening videos, night videos. This webcast, I'll refer to the auto expected move indicator. Looks something like this. In fact, I hate using screenshots, so I'll just cruise over here. By the way, people constantly ask me which trading applications I use. I do use thinkorswim. And of course, I use Tastyworks, and I'm doing a lot more trading on Tastyworks right now. I'm pointing right now to my screen, but I do a lot more trading on Tastyworks and some of the analysis a little bit on thinkorswim. Thinkorswim obviously now is owned by none other than Charles Schwab. So some changes there, some things I don't necessarily like going on in the business, but I'll stay on there as long as they let us do what we want on this platform. Nevertheless, the auto expected move indicator, I'll just give you a quick example. Like here's Microsoft today is getting killed. If I apply auto expected moves, you'll actually see that the move in Microsoft today is clearly and decisively almost 2 times, outside the norm. This line would be the norm. This is almost 2 deviations. It's called the 2 standard deviation move. Very, very close to its 2 standard deviation move is Microsoft. The uses for the auto expected move, it's huge. Stay with me right until the end of today's webcast, and I will give you a copy of the auto expected move indicator. And that's, it's our gift to you for tuning into the entire webcast. All right, boom, let's get down to business. This is why you're here, right? So you're going to discover why Ultima trades are ideal for the current market environment. Current market environment just means volatility. There's no clarity right now. You're going to learn a trading symbol that professionals use on a daily basis to construct Ultima trades. Talk a little bit about, obviously, volatility. I'll talk a bit about skew. You're going to learn where to find edge as a retail trader. And one of the most important things that I can impart upon you today, trading it's not so much about buy this, sell this here. Trading is much more criteria focused. You're going to hear that terminology, criteria, all throughout the course of today's presentation. What criteria amounts to and what we really do here at TheoTrade, we are a heavy criteria-based firm. And that basically means we're providing, highly detailed steps to be able to enter and exit a trade. Like anybody can go out there and talk about buying, selling here, and look at the magic, 8 ball, the arrows up and the arrows down. You're not going to hear at all today. It's not going to be Fibonacci. It's not going to be MACD. It's not going to be Bollinger Bands. I'm sorry. I don't mean to offend anybody, but I am not into charts. I am a quant in terms of a trader. We're going to talk about where to find edge. We're going to talk about reaping statistical benefits of high probability trades while learning, not to get crushed when you're dead wrong. That's huge. Like, look, You're going to make money, make money, make money. It doesn't help you making money, 90% of the time if the other 10% of the time you get absolutely annihilated. And we're going to find what products, okay, are viable and what products are a recipe for disaster. So we're going to cover a lot today. Here's a little bit about me. So as I kind of kicked this off and I said, if you're brand new here and have no idea what a TheoTrade or a Don Kaufman happen to be. So as I said, TheoTrade was founded in 2016. So where did we come from? And I say we, TheoTrade is not, we're not a one-trick pony. I am, one of the co-founders of TheoTrade. But when I say we're not a one-trick pony, there are 8 full-time instructors here at TheoTrade, all of which have a minimum of 15 years of experience, some of us market making background, some of us risk management background, but all 15 years of experience in the financial world, some of it actually money management. Here's my background. I actually grew up in and around the trading and market making business. I had an uncle that was a market maker back in the 1970s. If you're from the Chicago area, you would probably know the firm. It was called O'Connor and Associates. So he founded it in the 70s. He started with 1 seat on the Chicago Board Options Exchange. He built the firm to over 500 seats. So this is when I was, a little kid. I kind of grew up around it. I knew what calls, puts, and trading was from the time I could pretty much walk. And, people come into this business in all different walks in life. And, I was doing this and I was a teacher and I was driving a cab and all of a sudden I'm a trader. Okay, well, I grew up in it. Right out of college. 3 weeks out of college, I went to Chicago, started trading with a cousin of mine. A few years later, I was actually invited to a startup firm called thinkorswim. I knew the guys from thinkorswim fairly well. I had met them at the Chicago Board Options Exchange. They invited me into this startup. I spent 15 years there. I actually built the entire education side of thinkorswim. I went on to be on the executive team. We took the company public in 2007. We were purchased by TD Ameritrade in 2009 for just shy of $1 billion. It was a pretty strong exit for me. By the way, when TD Ameritrade, people always ask why I left. When TD Ameritrade bought us, I signed into a 5-year lockup. So I had 5 years extended on the contract, literally 5 years and a day. 2015, I exited. We launched TheoTrade in 2016. Probably the most insightful portion of the entire career and what we use extensively to this day here at TheoTrade is I got to see order flow for the better part of 15 years at a firm with the largest option order flow in the entire world. At the time that I was at both thinkorswim and TD Ameritrade, no one even came close to the flow that we had in terms of active traders, stocks, options, futures contracts, currencies. We saw it all. What we learned, and I say we had an entire education group. 768 individuals were involved in the education side of TD Ameritrade. 768. That was just the education division of TD Ameritrade. Listen, what we learned, was to look at order flow, to be able to decipher order flow, and ultimately what works best for retail traders. There's one huge problem with that. We learned everything we possibly could about you, the retail trader, and then of course the SEC and FINRA. They don't let you use that information. So several of us left. What did we do? Started TheoTrade. And a lot of the people that are here today at TheoTrade, including myself and Jeff Bierman and Blake Young and Brandon Chapman, come from a background of TD Ameritrade and thinkorswim. So again, you're going to learn today the knowledge of what works best specifically for you, for retail traders. By the way, if you ever need to get a hold of me after today, just email me, support@theotrade.com. All you have to do is put my name, in the heading, the title of the email there, the subject line, Don Kaufman. It goes directly to me. So please feel free, shoot me an email at any point in time. Do some TV. This is actually TD Ameritrade TV. That's the last time I was actually in Chicago, 2019. It's pretty crazy to think that I grew up going to Chicago constantly, traded, worked in Chicago for the better part of almost 20 years. And now I haven't been back since 2019. Why? Because an island is warmer. Anyway, it's a CNBC appearance, but I just did TD Ameritrade TV 2 hours ago. Just on there 2 hours ago. This is a CNBC appearance, obviously one of the more memorable CNBC appearances because they pitted me against Kevin O'Leary. And this is actually brand new. For those of you who didn't see this, it's the Investors Business Daily. We actually took the cover of Investors Business Daily just about 2 weeks ago. This is actually December 19th cover. And this is actually my quote in here. This has actually been the best year I've had since the financial crisis of 2008. There's nothing more controversial that you can say than that. Okay, this has actually been the best year I've had since the financial crisis, said Don Kaufman. Okay, it's the whole entire article is based around, well, turning lemons into lemonade, because, and this is exactly what we're talking about, volatility. Okay, use it to your advantage. Let's get down to it. Volatility, it's arrived. It's not going to abate anytime soon. You still have inflation running red hot. Fed pushing rates higher, contracting the balance sheet. There's still a relatively strong dollar. Okay, geopolitics proliferating. A lot of issues. Let's just put it out there. Like, I don't even care whether you look at the issues. I got a lot of issues out there. There just are. Okay, game on. Markets got real in 2022, and you know what? I love that statement because they did. They got real in 2022. As before that, and let's actually kick off with this. So there's going to be some good stuff in here. Let's actually cruise over to like spiders. All right. Now, this is a 9-month chart. 9-month chart, that's no fun. Let's go to a 5-year chart. Better yet, let's actually go just to the max chart available. So when I say the markets got real, okay, these are markets that are, well, not heavily influenced by Fed, except the Fed was heavily influenced, which is Greenspan, raising rates, okay, heavily influenced again. All of a sudden, what have we been? This has been quite the little tirade of Fed influence. The Fed backs away, and we start to tank. All right, it's a party out there. So the only thing I'm going to say over here is, again, the markets actually got real in 2022. All right, it's not that we perform better in a bullish market, a bearish market. Here's the bottom line: we perform better in volatility. What we're going to talk about today is going to embrace volatility, embraces the chaos. We're going to do something that does not rely on directional bias. I'm not going to sit here, as I said, and talk about a MACD or a Fibonacci or a Bollinger Band. Okay, if markets are straight up and markets turn around and the Fed, changes its mind and pivots a little bit, we'll be ready for it. But what we're going to do today doesn't rely on directional bias. Okay, and reduces risk while substantiating monthly returns. So again, what you're involved in right now, you're 2 years removed from looking at a Reddit board and going, GameStop, yay. Boy, those days are over. Just 2 years removed from that, more like 18 months removed from that. But the peak of that crap was going on in early 2021. Markets got real. Okay. You're going to have to learn something now if you want to be successful in this business. And what you're going to have to learn right now are Ultima trades. So higher volatility has resulted in significantly more options premium. Okay. Now, I just said the O word, options, and I said it a couple times earlier. Okay. We are going to discuss, okay, options. How many people are relatively comfortable with that? All right. Yes. Y for yes, N for no. How many people here are relatively comfortable with options? It's okay if you're not. And I want you to realize that. Okay. I'm just trying to gauge because, listen, what I'm going to do during the course of this presentation. Awesome. Wow, almost everybody. I've literally had like one no in here. Cool. A lot of you answered. I do appreciate it. So, and by the way, I like when somebody said traded options for years. That's the make money, get hit by a Mack truck. We're going to talk about that. The higher volatility resulted in significantly more options premium. It makes option prices higher. Okay. Ultimate trades are definitely designed to sell options premium while reducing risk. So that, okay, is the beginning of it. And again, what we're going to get into here is learning to sell options. So even those of you that have absolutely unequivocally no experience, first of all, bear with me. Like, don't panic if you have no experience. But even people that have no experience in trading and trading options, they always hear through the grapevine. There's, like the voices out there, and selling options is the way to make money. But the truth of the matter is selling options is a good way to make money, but it's only, it's a way to make money in heavier volatility. But the problem with that is if you've experimented with selling options, you know full well that there's risk involved, right? And this is what most people do when they sell options. They make a little bit, incremental, and making a little bit, get hit by a Mack truck and you go, it's horrifying. And that's what happens to most people is they they make a little bit incrementally and get themselves into very serious trouble. Okay. Anybody? Did anybody do that? Has anybody done that before? Come on, people. Again, admitting is first step today, right? So today's session, what I'm going to do is I'm going to separate myth from real risk, fact from fiction in selling options premium. More importantly, yeah, we're going to talk about when the Mack truck comes, how to move out of its way. All right. So risk is something that we're not comfortable with you taking a lot of it. We have to get you into a higher probability trade. We want to generate monthly income. We want to reduce risk in doing so. I think it's reasonable to do just that. And again, I'm going to show you exactly what we have been doing since the onset of COVID. As I said a moment ago, don't panic. You can do this. Don't you panic. Maybe you know nothing about options. That's okay for today's session. Listen, if you know nothing about options, just try to grasp big, broad strokes, big concepts, right? Don't worry about when we get into the weeds and some of the finite criteria. For those of you that are experienced, okay, you want to pay attention to some more of that granular criteria. For those of you that are new, just grasp the logic, right? When I say grasp logic, that'll make sense here in just a moment of what it is that he's trying to do. The other aspect that I really want to hammer home right now, I'm going to show you, okay, a style of trade that traditionally would eat a lot of margin, okay? What am I going to show you a lot of margin? Because that implies you have to have a big account. You need not have a big account. Small, okay, is okay, under $5,000. So let me just lay this on the line for you. If you want to trade the strategies that I am going to do today, it is $2,000, okay, minimum in a margin account. It would be $5,000 in an IRA, okay? And I just put it on the line for you right now. Like listen, everything I do here at TheoTrade, this is no holds barred. And when I say no holds barred, people, they always ask, will you show me your account balances? Well, first of all, it's like the second trading day of the year. We show everything, every position, okay? Listen, people, I trade. It's something that I have done now since 1998. Again, 24, 25 years into the business. And when I say it's no holds barred, I'll show you every position throughout the course of the year. I'll show you every position from last year, every P&L, okay? It's no holds barred. I want you guys to be able to see catapults and TheoTheo portfolios. And this is just crap that I'm doing on the side, unallocated. Like, I want you to see everything that we do because that's how you're going to learn, right? So again, don't worry about if you have a small account. All right, many facets of selling premium. The term selling premium, selling options, it can be called a lot of different things. It's something fun that I always remember. When I very first got involved in this business, I remember traders telling me, look, kid, there's a call and there's a put. That is it. You can buy it and you can sell it. Except selling premium could be called selling premium, called credit spreads. There's bull call spreads and bear call spreads and bull put spreads and bear put spreads, short call spreads, short put spreads, delta neutral trading, selling naked. There's iron condors and mambo combos and conversions and 1-3-2 ratio butterflies and flybys. Oh my, I could go on for a half an hour about all the crap out there. But in the end, there's a call and there's a put and you can buy it and sell it. So you can create bullish trades and bearish trades, but you got to get all that through all that vocabulary. Selling premium, okay, all right, is about trying to generate income. That's what it's about. It's considered predominantly market neutral. I wanted to throw that out there. How our members are doing year to date. This back in September. Started my IRA in June, following TheoTheo to small, up 28%. Marianne, thanks to Theo, took my entire 401k to cash 18 months ago. Here's another one, November 9th. I'm predominantly following the Ultima and now Flyby and looking forward to the new Catapult. You're a great teacher, okay? This year, my account's up 30%. I mean, this stuff, it means something to me. That's why I put it on here. Let's get down to business. Let's talk a little bit about trading. So you're trading. That's it. I'm standing up now, okay? I can't sit anymore. So let's jump in here. Oh, blurry camera. I'm ruining the camera now. All right. It'll come around here momentarily. It doesn't like when I raise and lower the desk. All right. Your trading is based on a blurry camera. I know everybody wanted to see my hand. See, crazy enough as that sounds, it fixed. You got to break it to fix it. Your trading is based on probability. One of the first things I like to mention, because people email me every single day and they say, how often you're right? I go, listen, it doesn't matter how often you're right. You and I can create trades all day long with a 90% probability of success, but you can still lose money. And I'm deadly serious about that. You got to stop with that crap. How often are you right? I don't know, 90, 95% of the time. Probability, it does not make you profitable. You better remember that. Probability doesn't make you profitable. So you can look at a portfolio, okay? You can look at a portfolio and you can get led into the idea, look, man, this guy's right 95% of the time. Okay, you want to see how to be right 95% of the time. And I'm not trying to be facetious, okay? I'm trying to get you guys to understand. Look, you want to be right 95% of the time. We go into a product called the spiders. Look, I'm going to open up a 44-day option. There's a little thing I can click over here. This is called an information layout, options, theoreticals, and Greeks. Come over here to probability OTM. What does that do? Probability out of the money. I'm going to scroll up. Look, if I sell this option, I'm right 95% of the time. Sold. Does that make you money? No, but it's kind of cool to say that you're right 95% of the time. That's what probability out of the money. And every major trading application now has this. That's calculation that's been on thinkorswim since 2004. I know, I helped build it. So probability alone does not make you profitable. Markets are always a trade-off, right? Higher probability equals higher risk. You could be right 90% of the time, you can still lose money. But where can you find edge? One of the most important things that I can impart upon you today, what you are here to do today is not just to learn like, fluff, okay? You got to figure out where edge is, right? And that's what people are here for, because I'm about to show you something very important. So sit back, relax, let's get into it. Look, discovering probability and premium selling tactics. The first thing I'm going to do, I just want to explain to you, again, logic in trading here. Apologize, I'm pulling on a cord that might break something. Oh, we're okay. So I have a sit-stand desk. Some of the cords are a little bit tight when I actually raise up the desk. Things get a little sketchy over here. Here's a stock, okay? And the stock is trading at $100. Now, do I own the stock? No. Do I want to own the stock? No. Why don't I want to own the stock? I don't know. Have you looked at Microsoft today? By the way, the fun thing is about this marketplace, like if I said, even a year ago, I said like, you should be really careful. Like these stocks is just, they're like a ticking time bomb. People have laughed at me a year ago to the day. And, look, here's $100 stock. I don't care what it is. It could be Apple, it could be Microsoft. Yeah. And tomorrow it could be trading at $90. That's the reality of the beast. You need not actually worry about that. In this case, we're going to trade some options around it. The first trade I'm going to do is I'm going to go what we term way out of the money. What does out of the money mean? Okay. It means the nosebleed seats. So here is a $100 stock. I'm going to look at a 120. Okay, a 120 call. Now, with a 120 call, for those of you that have absolutely unequivocally no options experience, okay, with calls like puts, okay, you can buy them or sell them. Now, in this first example, I am going to choose to use call options. Why do I choose to use call options? Because puts confuse people. Puts, you're buying the right to sell, or you're selling the right to sell. And people go, what? It's like a double negative. I'm buying the right to sell. I'm selling the right to sell. Confuses the hell out of everybody. So let's just talk about a call. Is that fair? Because again, the concept matters more than the trade right now. So first we go conceptual, all right? And then we go into not just conceptual, I'm actually going to look into and possibly execute a couple of trades. So conceptually speaking, here's a 120 call. Now, what could I do with the 120 call? I could be a buyer or a seller. Now, let's say that I buy it. I buy it And for buying it, I have to pay $1. So if I buy the 120 call, what is a 120 call? 120 call gives me the right to buy the stock at 120. Is the stock trading at 120? No. Where's the stock trading? 100. Do I own the stock? No. So why am I buying a 120 call? Because I want to, because maybe I think the stock is going to go up and up dramatically. Is that possible? Yes, especially like right now, like wildly oversold stocks. But this call could be good for as much as 3 months. So I'm just paying $1 for a wing and a prayer. So think about this. I'm buying a 120 call. Okay, buying a 120 call. By the way, buying, palms are to me. Selling, palms are to you. So I'm buying a 120 call for $1. What's the most I can lose? $1. What's the most I can make? Unlimited. This could go to 1,000. They never do, but theoretically, okay? Now, from a probability point of view, let's see if you guys get this. From a probability point of view, does this have a good chance of making money? Anybody? Does this really, truly, does it have a good chance of making money? No way, man. This thing's a wing and a prayer. Doesn't even matter what stock it is. That stock has to go up 20%. That's a zero. That's got to go up 20% just to do what? To break even. So most of the time, what's going to happen to this option? Okay. Most of the time, right? Stock stays flat, you lose $1. Stock goes down, you lose $1. Stock goes way down, you still lose $1. Stock goes up, you could probably lose $1. You're not losing $3. It's the same dollar. But the point I'm trying to make is from a probability point of view, this is a really, really low probability. Okay. It's a really, really low probability trade. And that is, it's something that, a lot of people do, but I just wanted to point out from the buy side before we actually talk about selling premium. Now, in this next example, I am going to go out, okay, and I'm going to sell the exact same option. I'm going to sell the 120 call, okay? And when you sell a call, you're going to receive a credit. So what am I going to receive? Positive $1 equals my credit. So here we are. I'll put this down below. I'm going to sell a 120 call. For that, I'm going to collect $1. We're going to say that that call is good for 3 months. It's a very, very reasonable trade. Okay. So I go out and I open the position by selling a 120 call. Now, a lot of you immediately, you're going to look at this and you go, excuse me, I do not have the margin for that. I told you don't worry about that. You can do that trade with $2,000 in your account. You go, I can't. Yes, you can. Would it be okay if I showed you how to do that later with $2,000 in your account? And you go, oh, okay. Okay, if you show me, right? So there's a lot in this business, like, spending 15 years in the brokerage world and the education side, there's one thing that I'm really good at. Okay, circumnavigating margin restrictions, circumnavigating every rule from SEC, FINRA, NFA, CFTC. By the way, I've held every license pretty much imaginable. I've had a Series 3, which is a futures broker dealer. I've had a Series 4, which is principal options broker dealer. I've had my Series 7, which is a general broker dealer, right? Then I've actually had my Series 24, which is a principal broker dealer. Then I've actually had my Series 66, which is a 63 and a 65 combined. You want fries with that? I started in this business managing about $400 million. Along with Tom Sosnoff. That was how I got my start, kind of at thinkorswim. Then I progressed on to bigger and better things. Managing money was not fun. Managing money wasn't fun, but going on the road educating, that was fun. Anyway, okay, it's about fun. So I go out and I sell this 120 call. Do I own the stock? No. Do I want to own the stock? No. Why don't I want to own the stock? Stock goes down, man. You're gonna get killed in there. So I go out there and I sell this 120 call and I collect $1. Now, the part that kills everybody go, you have to wait 3 months, Don. 3 months to make $1. And I go, no, yes, to make the full $1, because this option would not expire worthless until 3 months from now. Okay. But don't worry about that. Don't worry about that just yet. We're going to get there. First thing I want you to see, what's the probability in this trade? Really high. How do you know that? Because look, the stock has a high probability of staying flat. Stock could go down, right? Stock could go down. Where could it go to? It can go to 90. Okay. The stock could even go up. Stock can go to 110. Even if it goes to 110, what are you going to do? You're like, I'm okay. I'm scared, but I'm okay. And if the stock goes to 120, technically you're still okay. Even if the stock goes to 120, because you sold a 120 call. If you sell a 120 call, what is that? Well, when you buy a 120 call, you have the right to buy the stock at 120. When you sell a 120 call, that gives somebody else the right, okay, to buy stock from you at 120. And you go, but I don't even own any stock, but that's okay. All right. So you sell a 120 call naked, you collect $1, and what do? You sail off into the high probability sunset. It's the only thing I want you to understand right now from this point of view. Okay. Don't overthink this right now. The only thing I want you to understand, that's an incredibly high probability trade. It's an incredibly high probability. Okay. All right, this stock is $20 out of the money, which equates to 20%. That trade has upwards of, let's say, a 90% plus probability associated with it. Now, does that mean it's always going to make money? Absolutely, unequivocally not. Okay, but I want you to understand the trade has about a 90% probability. Are we okay so far? Right? Questions, comments? All right, just want to make sure that we understand this is an incredibly high probability trade. Now, everybody's, of course, worried about like, what about the margin? Because, well, margin we're going to discuss in a moment. You know what you should be more worried about? All right, you should be more worried about the movement of the stock. What if the stock goes from 100, gaps all the way up here to 140? What are you? Oh, that is going to leave a mark because the stock goes to 140. You sold a 120 call. 120 call gives somebody the right to take stock from you at 120. Do you have stock? No. So you'd have to buy the stock at 140 to give them the stock at 120. You would lose $20 per share minus the dollar you collected. You're out $19. You're puking under your desk. That would be awesome. And that's what happens to a lot of people when they sell options. Am I correct? Okay. Anybody done that? Puking under the desk, right? Okay. And realizing it's like a waste paper basket that's got holes in it. Okay. Those never made any sense to me for traders. Like, think about that. Don't get the metal kind with holes in it because you're a trader, especially if you're going to sell options naked like that, because eventually you're going to need it. Anyway, this actually happens to people though, where, you know, they sell naked and the stock actually explodes up. It's not what we're about. Okay. What we're about, all right, is learning to actually just understand from a high probability, you know, perspective. Now, before I go into a live trade, okay, why sell options so far out in time? Did you notice in my example, I sold options a few months out in duration? Okay. Did you see that? I sold options a few months out. Typically, traders sell short-dated options. Okay. But that's actually why you're tuning into this webcast. What we do here at TheoTrade is we're about criteria. It's what we do. What is criteria? It's tuning into specifically what options are going to make the best trade. It doesn't matter. Like, people can figure out, I should sell options. Newsflash, everybody knows that. Okay, it's higher volatility. I should sell options. But you got to know which options to sell, how much to sell them for, how far out of the money, what expiration cycle. We're going to get to all of that. That's what criteria happens to be. See, people look at this decay graph. What a decay graph basically, okay, alludes to, the closer you come to expiration, the faster the option decays. How many people have seen that, right? Okay, so you look at this and you're like, oh yeah, man, the last 3 months, and then if you get really specific, like right in here, maybe 45 days and then 30 days, that it just goes parabolic. Yeah, but you know what? There's a trade-off in this business. The rapid amount of decay carries a rapid amount of risk. Bigger decay, bigger risk. Bigger decay, bigger risk. How about if we could ward off the evil spirits of risk? Okay, let's go back to this for just a second. When I say ward off the evil spirits of risk, okay, let's go out and let's actually learn how to generate some decent money. Okay. First of all, the market today is up about 1%. The Nasdaq is lagging a little bit because Microsoft is getting killed. The way Microsoft, it just paints the picture of what I was talking about a moment ago, like trading stock. People talk about risk and they seem to equate options in some respects as more risk than stock. And then you look at something like Microsoft in the midst of volatility. If you're an owner of Microsoft, you know, you're down 4%. You're way off the lows today, way off the lows of Microsoft. Like, Microsoft traded 226. Okay. I mean, this thing has rebounded already, but just to exploit for a second. Okay. This is the second largest market cap on the planet. Okay. And it's down almost 5% today. So you're not safe anywhere. Yesterday was Apple's day to actually get crushed. All right. The day before that, well, yesterday as well, was also, you know, Tesla's day to get crushed. There's no safety in the midst of volatility, and you need to realize that, because eventually they're going to hit them all. Today, in the first example, I'm going to use spiders. Why am I going to use spiders? Because it's a marquee product. The spiders, if you're unfamiliar with them, it's the S&P 500. The spiders today have already done, that's right, people, 5 million contracts, almost on the button. Pretty cool. Almost 5 million contracts have traded a spider. So are they a liquid product? Uh-huh. Okay. Are they okay to trade? Oh, yeah, apparently, because they have 5 million contracts. Nothing's even close to that, by the way. Like, even if you looked at like Microsoft, Microsoft is some heavy volume today, but just to give you an idea, Microsoft isn't even in 1 million contracts. Okay. Go look at Apple, which is one of the most heavily traded products out there, hasn't even hit 1 million contracts. So what do you learn about the spiders? Okay. Understandably, it's the most prolific product ever developed. More people trade this than anything else. I'm going to go 107 days out. Okay. 107 days out. And I'm going to look for a trade for you. Okay. By the way, you can see I've got positions in here. So, all right, we just, we don't just talk, we execute. So execute. Anyway, I'm going to look at this little monkey right here. Okay. I'm going to do the 450s because it's a nice round number. And I'm going to bring this up. Those 450s. I'm going to write it right up here, right? I'm going to go out in this first example and I am going to sell. Okay. You with me? I'm going to sell the 21st, okay, of April, 450 calls. And for that, I am going to collect, fix that so you can actually see it. Okay. And for that, I will collect, oh, let's say 95 cents. I'm just going to round it to 95 cents. 95 cents. Now, time out. And what am I going to do? That's it. I go out. Here's the trade. I go out. He loads up. Let's actually do it. He loads up the sale of the 95, the 450s. 450. I'm going to route it right at 95 cents. Hit confirm and send. He sends the trade. Working. So right now, I'm the offer. What that basically means is when I say I'm the offer, okay? There I am. Here's my account number. I'm the offer. So there's a bid of 93 cents. I'm offered at 95 cents. If we trade just mildly higher inside of the spiders, I'll fill. Okay, Captain one lot rise again. So I'm fine with that. Let me fill my one lot in there because I can tell you right now, I think I already have a 10 lot just below it. So adding another one lot to it, yeah, I got another 10 lot below it. So that's not gonna really impede upon me very much. Just adding a little bit to the inventory. So I'm working this at 95 cents. Now, time out. Then what do? Okay, I do nothing. Everybody else is doing something. They look at their MACDs and their Fibonacci's and their Bollinger Bands. Do you realize I'm selling the 450s? Now I know it's 107 days out, okay, but I'm selling the 450s. We're 450s. It's up here in the nosebleed seats. Like, look at this from a chart point of view. For the last 3 years, to get to 450, okay, to get to 450, that's right there. Yeah. Oh, so if we get there, I'm a loser. Okay. Am I going to sit here? Am I going to sit here and just hold this position for the next 107 days? Am I going to sit there and hold it for the next 107 days? Because you realize that is going to tie up a tremendous, okay, amount of margin. Anybody? I like somebody saying, I was hoping for a more deep dive into scanning how to pick trades. What do you think we're doing right now? Okay, putting a trade on. I'm not just picking a trade. This is the trade. It's a trade, and I would do this one. So if you think this is about, again, MACDs and Fibonacci's and Bollinger Bands, let me tell you something about volatility. In here, okay, this could not be a better conversation piece right now. In just about an hour, the Fed's going to come out. Well, the Fed minutes are going to come out. No MACD, no Fibonacci, no Bollinger Band's going to see that. If today doesn't confuse you, then Friday morning, the jobs report's actually going to come out and rock the markets again. By the way, next week, you got to go through it all again. There's a lineup of Fed speakers next week. You got to forget about all that crap. I'm serious. You can't scan for anything right now. Just so you guys know, this scanner, okay, specifically this scanner on thinkorswim, that was my project. I had $7 million, okay? And a gentleman by the name of Jeff Bierman actually was my right-hand man. We built the scanning technology for thinkorswim, okay? And right now, it's all for nothing. This is volatility. This is the stuff you've got to learn, okay? And people are not very open-minded to, like, listen, this is volatility. You're going to have to learn. Here's the key point. I'm going to go out and I'm going to sell this for 95 cents. Now, I'm not going to sit there for the next 107 days. I am not going to sit there for the next 107 days. All I'm going to do is I'm going to wait about a month. What's a month look like? Well, if you look right now at this 107-day expiration, what's about a month into the future? Let's say about 72 days. So from 107 days to 72 days, what is that? It's 35 days. Okay. If I fast forwarded 35 days, what would my 450 calls look like? Now, this is assuming that the market stayed flat. Now, I know the market's going to go up and I know the market's going to go down, but I want you to see something that is critically important here. Okay. There is a massive amount of decay in longer duration options right now. I'm going to say it again. There is a massive amount of decay in longer term options right now. Okay. Take a look at the 450 calls exactly 35 days from now. That's 35 days from now. It's just over 1 month. Imagine, okay, all things being equal, 1 month from now, I'll turn and I'll buy back that 21 of APE 450 call, okay? And I'll pay approximately 38 cents to get it back. What have I made? Let's just say, roughly speaking, you should be making between 50 to 60% inside of about 30 days. You can make 50 to 60% inside of 30 days for doing what? Absolutely nothing, okay? Absolutely nothing. The only thing you do have to learn in here is, okay, that is Ultima. When people ask me what Ultima really is, it's about fine tuning exactly what option, okay, and what strike to sell. The problem with that is it takes extraordinary risk, because if we're wrong and the marketplace explodes higher, the Fed pivots and turns, you're in trouble. We will mitigate that risk, okay? We will not take a lot of margin in here, but you're able to make between 50 and 60% inside of 30 days on an option that is so far out of the money. It's like, you know, you're sitting in a stadium, you're not even in the nosebleed seats, you're out in the parking lot drinking a beer, okay, while everybody's actually at risk. And you need to understand, selling the 450s, we're at 384 right now. Even if we rallied massively, okay, we're probably not going to hit 450 overnight. See, the thing is with options, when people sell short-dated options, they get killed overnight. They get snapped in half, right? How can that happen to you when you're selling the 450s? Furthermore, we're actually going to reduce risk. But what I want you to see is, look, I told you that coming in today that we were going to try to make money, okay, monthly. And then you saw we trade this 107-day option. You go, don't do the 107-day option. It's ridiculous, man. I'm not waiting 3 months to make my money. You don't have to wait 3 months. You're going to wait 1 month, make 50 to 60%. You're in, you're out. What do you do the next month? The same thing. All we're doing, instead of something ridiculous like riding short duration options, okay, I'm just using the slower pony that's still going to get me there. I'm using the slower pony that's going to get me there, okay, but it's going to get me there with a lot less risk. Okay, you want the faster pony? Oh, you go right ahead, 16 days out. I want to make a quick point. You want to collect that same, money 16 days out? Look at this. Okay, do you go sell an option out here? Look, these have 95%. You're going to sell it for 47 cents for the next 16 days. And this is the 409 strike. You think we can't get to 409? Oh, not only can we get to 409, we were just there. Yeah, we were just there at 409, right? It's insane. Selling short dated options, okay, is just, it's digging a very shallow grave at this point. We're going further out in time. Why? Skew has shifted. The volatility skew has shifted. There is much greater option premium to sell back here. Look, 107 days out. I'm serious. Look, just follow the little bouncing ball over here. Okay, that says 24%. If you look at the short dated stuff, like some of the really short dated stuff, down to 20%, okay, 22%, 21%. This is insanity to sell right now, okay? And when you start opening up the option chain, you start to look at implied volatilities, woo, it's much better out here, okay? Go with a longer duration option. But that, okay, unto itself is not all of Ultima, because what we have over here now is, hey, look, we sold an option further out in time. And then, of course, people are going to ask me, well, yeah, but where else can I do it? First, I want to ask this question of you, okay? If it works in spiders, why do you have to go elsewhere? I'm just asking the question. If it works in the spiders, why go elsewhere? Okay, you're like, oh, that's an interesting point. Because I want to put myself at risk. Let's go to the Nasdaq. This is the QQQ. So let's go to the Nasdaq and let's do something similar. Let's do something similar. Now, the Nasdaq, ooh, this one's a little crazy because there's not exactly any shorter duration options all the way 135 days out. Okay, this is not going to be the easiest example or the cleanest example. I'll tell you what, instead, we'll go to the IWM, see if the IWM has those. Yeah, this is the same. We can use the QQQ. Just for this example, it can make it a little bit more difficult. All right, we could use the 72-day option. I don't love it, but we could use the 72-day option. Quick glance over here, selling an option for about $1.10. This is the 310s. Okay, the 310s are still really far out of the money. What are they going to be worth when there's like less than 30 days? Those 310s are going to be worth 35 cents. Okay, it's a home run. That's almost 70% return, almost a 70% return inside of what, 30 days. And again, we can go all day long on here, right? We can go all day long. By the way, somebody said, because I already own the stock. Well, in this example, I don't own stock, but if you do own stock, you can actually use variations of this, which I'll actually get to throughout the course of this. And again, I like to answer some questions throughout this because I want to make it interactive. So one of the most important things that you can learn right off the bat over here is we are using options further out in time. Why? They decay very, very rapidly. You know, if you can make 50 to 60%, okay, drive it in the slow lane with a lot less risk, why aren't you doing it right now? And I'm going to show you the track record that we have over here that's now well over 2 years. We have 2 years of track record, okay, that speaks for itself. We've taken a handful of losing trades and the losses have just been negligible. We're talking like, you know, just like skinning my knee. And we've been through some extreme freaking markets and still, okay, it doesn't matter. I mean, again, it's knowing the right premium to sell and how to reduce the risk. Now, there's one other thing that, of course, people are going to ask me and they're going to say, well, what about margin? How about if you can do this? Okay, first of all, here's my margin. I'm not going to go into too much depth over here. There's my margin. I'm going to highlight it. I want you to see it. Okay, what do you mean there's your margin? Right there. You see where it says cap requirement? My margin on this particular position is $1,222. Okay, by the way, that is inside of an IRA. If this isn't a regular marginable account, it's half that. This would be $611 margin, okay, inside, again, of a standardized account. So I stress to you, all right, in a margin account, don't tell me you can't do this. What am I using to circumnavigate margin? Instead of trading standard options in the spiders, I'm actually trading, this is S&P 500. S&P 500 equals SPY. S&P 500 also equals SPX. S&P 500 also equals ES, options on futures. S&P 500 also equals MES. The ES and the MES are actually what we term options on futures contracts. There's really not much difference between it and the SPX or it and the spider, but you can actually trade these, okay, with phenomenally low margin. And you can now trade those inside of an IRA. Yeah! And look at that, $1,222. That is my IRA, and it is my IRA. By the way, this year just started, but you can even see, like, if I go in here and click, it'll actually say like SEP IRA as another account in here. Okay, but this is a SEP IRA. So it is what it is. You know, if you guys are comfortable in understanding this stuff, don't tell me that you don't have the capital to do it. $2,000 in a regular margin account, and you absolutely can trade this. Now, as I was saying, this is what most people expect, that the burn is shorter dated options. But that's not what we're doing here. We're selling longer dated options. We're selling longer dated options. We're getting in, we're getting out, we're getting on with our lives, okay, and it's safer. But what you have to be concerned about is the trade that I just brought up. And I want to go back to the original trade for just a second. Okay, let's go back to the original trade. And I did not fill yet, and the market's now 91, 93, and I'm 95 offer. Okay, I want you to see that this trade, and it's important that you see this trade right there, you see it, has a 95% probability of falling where? Okay, 95% probability of falling out of the money. Do I own stock? No. Do I want to own stock? No. Do I have to own stock? No. Why? Stock ties up huge margin. Stock has a lot of risk. I'm doing a trade that has a 95% chance. Okay, but what's going to happen to you? You tell me. What do you think is going to happen to you? tell you exactly what's going to happen to you. It's called 90% probability and the 10% hammer. You do trades that have a 90% probability. Eventually, the market just rips your face off and you're like, holy crap. This is the dark side of options. And you'll always hear about this stuff. You're like, I made money, got hit by a Mack truck. Let me explain something to you. And let me also explain it in the context of the most frequently, used trade. One thing I want to really emphasize to you. I've seen everything that you've ever done. I've thought about everything you're probably ever going to think about. Why? And I know that that sounds horrible to say. I watched your order flow for 15 years. Like, no one ever sends me an email, that like shocks me anymore. I mean, when I first started off, like it was in 2004 where I started building the education specifically of thinkorswim. Before that, I was trading capital for the firm, but it was about 2004 where I started trading capital. 2004 when I started in the education side of the business. And my first job in 2004, was I just basically got emails and people were like, I'm in this horrific position. And I'd be like, holy crap. I'd like look at their account and I go, oh, it's hideous, look away. But after doing that for the better part of about, 5-10 years, you kind of get used to it. But the point I'm trying to make is, if you've done something in terms of a strategy in this business, I've seen it before. It's like being a doctor. I'm like, seen it before. Seen it before. Nothing I'm gonna see that's gonna shock me these days. But there's one thing that always hits me, and people, they trade stuff like iron condors. This is how people, like, they go out and they take a class. Bear with me. They go out and they take a class and they pay $500 to learn a strategy called iron condor. How many people have done that? How many people have done it? Paid the $500 to go learn the strategy iron condor. Come on, admitting it's the first step today. Nobody ever wants to admit that. Anyway, for those of you that have absolutely no idea what an iron condor happens to be, iron condor is this. So here's the some of the comments are killing me in here. All right, it's funny because there was like 200 people earlier answered something. 200 people earlier answered. Now we have like 5 people who are like, maybe, maybe. The iron condor is this. You go out here, and you sell a call. Then you turn around and you buy a call. Then you turn around, and you sell a put and you buy a put. So what you want to have happen, you sell an option here, you sell an option here. This is a hedge, this is a hedge. All you want to have happen is stay between the lines. Just stay between the lines, And what happens is people, they'll go out and take a class on this stuff. And when they do take a class on it, it's fine. It's fine and dandy. But they go out and they take a class on this one. And what can often occur is some volatility hitting the tape right now. What can often occur is, well, they make money. So they pay $500 to take a class, and they did this iron condor, but the iron condor has a 90% probability of making money. And you're like, sweet, I'm going to fill in that trade here in a second. So you have this 90% probability of making money. So for the very first time you do this trade, you do it in the SPY, you do 1 contract, you make money. The next time you do the trade, you do it in the SPY, you do 5 contracts, 5 contracts is obviously a lot bigger than the first trade, and you make money, right? Because the trade has a 90% probability, Then you go out and do the trade and you start trading in something called the SPX, and you do 1 contract in the SPX, and lo and behold, it makes money. By the fourth month of doing the trade, so you've made money 1 month, 2 months, 3 months. Of course you've made money. Time out for a second. Aren't you doing a trade with a 90% probability of success embedded in it? You go, So why would you think you weren't going to make money? You go, you're going to make money. You're going to make money a couple of months in a row. But in the fourth month, you get cute. The fourth month, you go, I am the greatest trader alive, because you've made money the previous 3 months. So you go in there to the SPX, you do 10 contracts. By the way, the first time you step up into the SPX, you should know this, is the mother of all products. It is the product that goes to crush the most traders, hands down. So you step into the SPX, and the SPX is like, we got one. And all of a sudden, you end up with a huge move in the markets. Like right now, you get a huge move in the markets, it wipes out this trade. And not only do you end up losing the profitability from the previous 3 trades, it also takes 50% of your account along with it. And you go, I don't want this. And this is the plight of the iron condor trader. It's train wreck. Your losses exceed the gains of the previous three trades. Okay. And by the way, it doesn't necessarily have to pertain to an iron condor. This is what people that sell options fall into. And then I say, oh, I know, it's like I can see your account. I could see your account. I'm telling you, like the buck stops here. I've seen everything. Okay. I've seen everything. I've seen people take $20-30 million losses like that. Okay, where I actually had to step in, take control of the account. I've seen $100 million losses. I've seen $400 million lost in 2008 inside of 10 minutes. $400 million. And that was actually a subset of, a lot of accounts out there, but there's nothing, again, we haven't seen. So I try to impart upon you what we've not only learned from watching order flow, but we've learned from, tens of millions of dollars of our own capital. Okay, so anybody ever experienced this? Okay, the make money, got hit by a Mack truck, had no idea it was coming. Okay, by the way, that Mack truck, okay, may just have been ignited here moments ago, because if you're watching this right now, again, things are getting a little crazy out there. So the S&Ps, they're getting angry. I'm going to cancel that working order. I don't like to leave a working order open in this chaos. All right, that is one fast moving monkey market. So Fed minutes are out. And things are getting crazy. Okay, all right. It's not that crazy just yet. All right. So anyway, this is the plight of the option premium seller. Make small incremental money, 90-95% trades, get hammered all at once. And then you go and you learn, I can fix it. I know I can fix it. This is really degenerative trading. I don't like the term fix. I'm very cynical about the term fix. Anytime you try to fix a trade, I'm just going to be very clear about this. Anytime you try to fix a trade, okay, fixing implies one thing. You have to actually do something. Anything you do in the market, more risk, more commissions. More risk, more commissions. Commissions you free. Yeah, they're not really free, but that's okay. That's a different story entirely. So you're going to rack up more transaction costs. You're going to rack up more risk. You're already digging yourself into a hole to try to, fix a trade. And some people call it, I'm not fixing it, I'm morphing it. It's an amalgamation of crap that I'm going to turn into a bigger amalgamation of crap. Let's get that straight. Listen, some fixes may work, but the very notion of fixing a trade throws more good capital after bad. Just please understand that, this is a terrible analogy today. Take a car, drive it off a cliff, and bring it to a body shop. It's a terrible analogy because you actually saw there was a car that went off a cliff. It was all over the news yesterday. Everybody lived in it, but take a car, drive it off a cliff, bring it to a body shop. Okay, can you make that car work again? Yes, but is it worth it? No. I mean, you basically had to pay, more than the car was worth to actually bring the car back to life. Listen, the bottom line over here, you got to learn to do this correctly. You got to learn, okay, good position structure. What we're going to talk about right now is selling options premium. Okay, but I'm going to give you, if I will, the kind of the full Monty over here. All right. By the way, somebody said you haven't explained how we allowed to do this, okay, in the account. I absolutely did, sir. Right here. Okay. That only has $1,222 inside the account. It's options on futures. Circumnavigates all the margin restrictions. All right. So with that, okay, I'm actually going to show you a little bit about, all right, how to do this most efficiently. When you're going to go out and you're going to use Ultima, which is a premium selling strategy, okay, the right options to sell, okay, are critical. But even the more critical aspect is to understand from a big conceptual standpoint what we're trying to do here. This is not MACDs and Fibonacci's and Bollinger Bands. This is inventory management business. Okay, this is an inventory management business. And it's like I'm looking around my desk over here for like anything. Here, there's a strange thing to have on your desk, but a wrench. If you could dodge a wrench, you could dodge a ball. I have a wrench on here because I was building some of the monitor setup over here. But if you could dodge a wrench, you could dodge a ball. Anyway, this is a wrench. Okay, let's say that you're in the wrench business. Okay, what do? Now, you go out and you buy and sell wrenches. Well, you try to buy the wrench for, let's say, $2 and turn around and sell it for $3. So then what's the key? Okay, if you are in the wrench business, and I'm serious about this, okay, it doesn't matter what business. You could be in the water bottle business. That's the only other thing I have on the desk over here, okay? But if you're in the wrench business, okay, you're buying this wrench for $2, you're trying to sell it for $3. Then what's the key? What's the key to being in that wrench business? Okay, I'm serious. Like, what is it? You got to burn through as many wrenches as you possibly can. You got to just burn through those wrenches as fast as you possibly can. You got to sell as many wrenches as you possibly can, because the more you actually do, okay, the faster you're actually going to generate profitability. This is an inventory management business. Okay, so what I want you to understand about inventory management, think about going out here, all right, and starting to sell. In fact, you know what? I'm going to use real numbers on the screen over here. So hang with me for a second. When I say real numbers, I'm going to make this not just an example. I'm going to make it, far more realistic. Here's the spiders. Let's call them trading at like 385. We were trading 450s earlier. Okay, on the put side, what do we trade on the put side? Somewhere around those 310s. Yeah, that works. Okay, so we're going to come in here and we're going to learn to sell premium. So in this example, let's go out and let's sell, for instance, some 450 call. Okay, 450 call is going to be trading for $1. Apologize here. I'm going to make that even cleaner. 450 call, and it's going to be trading for $1. Before you know it, you're going to be selling. If the market rallies up a little bit, you're going to be selling like 460 call. That's going to be trading for $1. By the way, simultaneously, you're selling 310 put. 310 put's going to be trading for double. It's going to be $2. Before you know it, you're going to be selling, for instance, a 300 put. That'll also be trading for $2. I'm just showing you, just splatting, okay, a little bit of inventory. You got to have turnover. You got to have inventory. So now I've actually started with inventory on both sides. Why both sides? Critical. It's absolutely critical. You never trade one side of the marketplace. You got to trade both sides. Why? Margin. If you actually sell a 450 call, it will actually reduce your margin then to sell the 310s against it. So it doesn't tie up any more margin to sell both calls and puts. So from an inventory management perspective, imagine you could sell a wrench, okay, but you didn't have to actually pay any more to sell the screwdriver with the wrench. Think about that, for example, like you're buying these, okay, and then turn around and selling for $3, but you can actually sell then multiple tools. Now I have a screwdriver, a wrench, okay? And okay, the point I'm trying to make with my lovely props here to actually build stuff is you're going out and taking both advantage of both sides of the market. What's the problem though with this? So here's the SPY. I'm going to tell you exactly what the problems with this. Here's the SPY, and the SPY is trading at 385, okay? And that's SPY. Sooner or later, you're going to come up to, okay, catastrophic event. Now, this is where we're going to talk about markets. Forget about any analogy of a wrench, okay? If you could dodge a wrench, you could dodge a ball. I love that movie. Anyway, here's the 385, market at 385. News comes out before the market opens. What's the news before the market opens? Jobs numbers horrendous. Let's say it's this Friday. Jobs numbers horrendous. Okay, they were looking for 200,000 jobs. They got minus 200,000 jobs. Okay, market absolutely freaks out and panics. Okay, we start getting slammed to the downside. What do you think is going to happen to those 310 puts? They're going to explode in value. And what are you? Finished. You are finished. You're going to get blown apart in that. You cannot survive in an inventory management business, okay, without some type of risk reduction strategy. The whole key, all right, to inventory management is actually trying to reduce risk. Like even if you look at stuff like Amazon, and I'm serious, what's Amazon? Okay, the kind of Amazon, I'm not talking about the cloud business, but I'm talking about the retail business, about churning as much inventory as freaking possible. That's all you're trying to do is just bang out inventory. Okay, that's what Amazon tries to do. But all of a sudden, okay, if the marketplace stalls out, you're left with a ton of inventory. Okay, those wrenches start to rot like apples. You can't survive that way. So you're going to have to actually reduce risk in some way, shape, or form. Enter, okay, what we term the hedges. So here is probably the most important aspect of understanding this and surviving, right? Enter the hedges. Dun, dun, dun. What are the hedges? Okay, what Ultima does is it actually seeks to reduce risk through very small incremental hedges. Now, do you have to pay for hedges? Yes, but hedges are like a sacrificial lamb. Let me give you 3 of them. There's a bunch of different hedges that we can use, okay? But I'm going to give you the 3 that are probably the most common. The first one is the risk twist spread. The next one, number 2, is what we call a VIX vol spread. And number 3 is a gamma iron. Okay. Let me make this very, very easy. Those are hedges. I always call hedges in my world, I call them the sacrificial lamb. And the reason I call them a sacrificial lamb, like if you think about like, I don't know, forever ago, take a lamb, throw it into a volcano, the volcano won't hurt you kind of thing. That's just the analogy I always use in my head. What you want to think of these hedges are, okay, they're an insurance policy that you absolutely need. Okay, and people go, but I don't want to pay for insurance. You know what? You operate a vehicle in this world, you got to buy insurance. You operate in this marketplace, in the inventory management marketplace, you got to have some type of insurance. The insurance is not going to be expensive, but it's not just essential. I'm just telling you, you will not survive without it. It's plain and simple. It's only a matter of time. When do you hedge? You always hedge. They're preemptive hedges. They're always on. Let me explain exactly what I'm going to do. Okay. We're going to talk about this VIX volatility spread, the one right there. We're going to talk about the VIX volatility spread. Now, a moment ago, we were talking about the SPY. Okay. And the SPY was sitting right at 385. And we went out and we were selling, for instance, the 450 call and collecting $1. And then we were selling, okay, the 460 call and collecting $1. And then we were selling, okay, let's get crazy. Let's say the 480 call and collecting $1. So you're out there, collect a dollar, collect a dollar, collect a dollar. Before you know it, you turn around and selling 310 puts, collecting $2, and selling 300 puts and collecting $2. And who knows? Maybe you're even selling 280 puts, collecting $1. There's your inventory. Within your inventory, okay, you're going to layer in a very, very tiny position. The tiny position, okay, is going to be placed, in this case, right here, okay? And that's actually going to be called a VIX vol spread. What is a VIX vol spread? It's going to be a very, very small incremental trade that you're going to layer into your inventory. Now, okay, this stuff here and here, this is all going to be done in one product. We'll call that product the S&P options on futures. The VIX vol spread is going to be done specifically in the VIX. But let me ask you something. If the market goes down, where does the VIX typically go? The market goes down, the VIX usually goes up. I mean, a real move down. I'm not talking about like a, we move down and we move down and we move down. I'm talking about violence in trade. I'm talking about, okay, we go from 385 and you wake up and that marketplace is down 5% overnight or 7% overnight. By the way, 7% overnight is limit down, but that market just comes slamming down, for instance, to 350. What's the VIX going to do? Okay, what's the VIX going to do? This is the interactive part. The VIX is going to start to explode. And the VIX vol spread is just going to spread its little wings. Okay, and what it's going to do is provide you this wonderful little umbrella. Okay, to not curb all the risk, but reduce a dramatic amount of risk to the downside over here. Right? Literally, the VIX is just going to boom pop, and the VIX pops. The little tiny spread that you placed for next to nothing just expands in value, and the expansion in value is more than enough to either get out of these trades, okay, reduce risk, or at least keep you in the trade long enough. This is what Ultima is about. This is what we do here at TheoTrade. And you go, what happens if we rally? Well, if we rally, we actually use a trade called a gamma iron. A gamma iron risk graph looks like this. We got to pass through up here to be able to hit risk. Okay, it's very easy to reduce risk to the upside because the market goes up, volatility inherently goes back down. Okay, so as the market's going up, the volatility is actually dropping back down in most respects. I'm going to fix this camera once and for all. Animal. Anyway, that, people, okay, is kind of the full Monty, and it looks like a lot going on your screen. It really does look like a lot, but in the end, you really want to know what it is? You're out there and you're just putting on some inventory, and you hope to sell some inventory. And you know what? 95% of the time, nothing happens. like getting an aircraft up into the air. Once the aircraft's in the air, you're like, this is nice. There's not much to hit here. As long as the engine stays on, we're going to be just okay. You know what? 95% of the time you're in that aircraft, nothing happens. The other 5% of the time is sheer terror. But that's why you actually have hedges. That's why you actually reduce risk. Okay. And you can't function in this business without those hedges, because I'm going to tell you, at that point, you're just a ticking time bomb. And that's what people don't really get about selling options premium. This is what Ultima really amounts to. Okay. This is Ultima. All right. Listen, this is why you want to be able to sell premium. Premium can be sold in small accounts, even under $5,000. As I just said a moment ago, okay, if you looked at my account, this is tying up $1,200 in margin. That's an IRA, ties up half the margin, half that margin inside of a regular marginable account. So you can do this in an IRA. Okay, there's a hedge in here as well. Can you see it? The hedge is right here. Okay, here's the actual position. So we absolutely can do this. Produces positive theta decay, meaning it's decaying in my favor. You can enhance existing positions. If you do own stock, you do not have to own stock, but if you do own stock, you can do this. Provides an incredibly high probability of success. Most of the trades we're doing have between a 95 and 97% probability of making over 50%. Never need to buy or sell the stock. You can be wrong on market direction. Market direction, okay, is not really going to even be something that we worry about. Yeah, if the market rallies big, we might want to do this. And if the market sells off big, it's more beneficial for selling this. But okay, market direction is not going to impede upon like the strategy. Like, listen, you need this in your life. This is what people do in the midst of volatility. This is what market making firms, proprietary trading firms, this is what they do. Like selling premium can bring in really consistent returns while minimizing your risk. But let's discuss criteria. And before I get into too many details, okay, here's some live trading examples. Listen, variations of all of the following trades that I'm about to present to you can be done with as little as $2,000 in a funded brokerage account, and it can be done inside of retirement accounts. I'm going to show you Tesla for a second, okay, and make a quick point. This is a screenshot, okay? I am copying and pasting directly from here on thinkorswim. Let me go ahead and close up this left side bar, show you the account statement. I'll just give you a quick example, right? If you're curious about like how many trades we do and so forth, 70 days, I've had 14 fills in the spiders. I trade in this account a lot of S&P options and futures, okay? And if you look back the entire last year, right? So I'll pull up literally, it's kind of a cool thing you can do on here. You can pull up 365 days. Okay, if I pull up 365 days, you can see 102 fills. This is everything that I did, okay, in the last year. Obviously, it's very difficult to match these trades up. Just, me scrolling through the last year of trades, 102 fills. So what I've done, okay, is I've matched them up here in the PowerPoint and I've given you the return. Okay, I'm starting in 2021. I'm going to start in 2021. Every trade that you are seeing, these are trade alerts. These are trades that have not only been placed with real capital, okay, and again, I want to show you, when I say real capital, everything we do here at TheoTrade is completely and utterly no holds barred. Like I'll show you every balance. I don't care. Profits and losses. Obviously, the year has just begun, right? So there's not much in there, but every balance, net lick. When I say net liquidating value of any given account. Okay, this one's got that's option buying power, but net lick is about 357 in that account. Okay, I've got another account over here, 220, another 100,000 in an IRA, another 70,000 another IRA. All told, we have a few $1 million that we're moving around. Okay, and this is just our capital in here. Nevertheless, okay, the reason I'm bringing this to your attention is everything I'm doing is just a screenshot. They're real trades. This is stuff that all went out to TheoTrade clients. These are not just trades that I placed. These are trades that have been texted out. We also use what we term push notifications, which I'll show you in here. We use push notifications in here where we actually push it out through our app. The Tesla position, okay, you can see, and I'll just highlight this. To open to close, 58% return. This is the exact date of the open, the exact date of the close, what I traded in here. All right, let's get down to business. I'm going to run through a bunch of trades really quick. Tesla, 58% return. Bond short put, 57% return. By the way, the bonds, one of the reasons I like to show that, it ties up very, very small amounts of capital. Another bond short put, 62% return. IWM, 53%. Tesla is a short call, 76% return. Okay, 60%, 50%. Now, as I'm starting to scroll through here faster and faster, okay, you're just seeing 50%, 53%, 50%, 50%, 64%, okay, 57%, all right, 56%, okay. Here's a 19% loss. It happens. These are just single options that have gone out there, sold, bought back, sold, bought back. It's like clockwork. Once you actually understand what you're doing in here, okay, and I'm just clicking through like every trade of 2021. By the way, literally I'm clicking through, okay. By the way, somebody was like 59% return was on what? There you go, bond short put. So that's actually on the ZB. I like trading the ZB. You don't have to like the ZB, but I like the ZB, okay. That was a ZBM. So that was actually June of 21, 154 put. Okay, just scrolling through here. Once you guys know what you're doing, you can actually scale up instead of trading spiders, which can be rather small. You can start trading, okay, S&P options on futures. Now, one S&P option on future is the equivalency of 5 SPY contracts. So this is stepping it up. Now I'm actually trading S&P contracts. Once you understand a little bit about S&P contracts and you're used to more size, then we can start doing more complex trades. More complexity in the trade would bring us to something called a Christmas tree. Christmas trees are ratio spreads. What's cool about this ratio spread, it has an embedded hedge to it, okay? The trade is and brings its own hedge to the table. This one's an 85% return. Look at this, put on for a $21 credit, taken off for a $3 debit. All right, just scrolling through. They're all right around a 50% return because, well, that's what our criteria kind of calls for. Here's another Christmas tree spread, put on for a $22 credit, taken off. I had to actually chunk out of this one a little bit, but basically this one's actually taken off for 92% return. Okay, still scrolling through. Now we're into 2022, which is obviously last year. Okay, another Christmas tree spread in here, almost a $4,000 profit for every 1 unit I actually placed. Okay, going through, and again, I'm speeding up here a little bit. So I'm going to stop at right about 18 months. Another Christmas tree spread. This is another nice one. I'm going to stop with just about 18 months of returns in here. Okay, I'll stop right there. People go, well, what happened after 18 months? Did you get killed in the latter half? Well, I just got like tired of pasting all this crap in here. If you want to see what happened in the remainder of the time, here, watch. Okay, I'm actually going to bring up. You can see everything, right, that we do, and I mean everything that we do. Let's make sure you guys see this. Okay, I'm going to go ahead and bring up what is termed the TheoTheo portfolio. So this is TheoTrade. If you're kind of curious about like TheoTrade, here's all my open trades. Okay, all my open trades, all my closed trades, to open, to open, to open, to close, to close, to close. You can see everything that I've opened and everything that I've closed. So the latter half, this is all the closed trades, the latter portion, okay, of everything that I've done in 2022 would obviously be found right here. There is no major hit that we took. I've used a handful of hedges the entire time, meaning that over the last 2 years in the midst of extreme volatility, here's a hedge that I had to use, okay? That's a hedge. I had to sell the hedge for 73 bucks. I ended up not taking any loss. Actually, the hedge made me money. Everything that we do here, okay, is found though directly on the site. It's actually found, you know, in terms of we text out these trades, we do push notification. Okay, this is not going to take a huge amount of time. Every trade that we have shown here today was done live on TheoTrade. Every single trade. The trade results are perfect for part-timers, as I said to you guys. So we do text messages. If I can bring it up, we do text messages. But if we take a quick glance, all right, at our application in here, so we actually have TheoTrade Mobile. I know you can't see it. It's TheoTrade Mobile. And what TheoTrade Mobile happens to have is basically every push notification. So we can go in here and actually take a look at all of the trades that we have done. But if you have the mobile application downloaded, you can go ahead and you don't even have to look for text messages, just does push notification. I know this sounds absolutely ridiculous, but it's one of the reasons I wear like an Apple Watch. I'm not like a huge like tech geek. I am a huge tech geek, but I wear an Apple Watch not because I enjoy the fashion of it. It actually, there's nothing like getting tapped on the wrist when you actually have a trade alert. Okay, probably the best time. By the way, I buy the cheapest Apple Watch out there, and just another one every like 18 months. But for $300, it's the best tap on the wrist you're ever going to have. You don't have to have that if you pay attention to your phone, but I don't. I have 3 kids. I can pay attention to absolutely nothing. I trade throughout the course of the day, then deal with chaos in the main house the rest of the day. Selling premiums hands off. You can even use set and forget order types. That's GTC. That means good till canceled. So even a fraction of your time, okay, is enough. Again, this is something that you're going to have to spend time in the learning curve of it. Like, you'll get it. We'll text you out trades. In fact, I don't even mind showing this right now. Okay. We don't just go out and just fire off trades into the big portfolio. We even have, okay, if you take a look in terms of portfolios, right? We have a duration portfolio. This is for people that want to be more hands-off. We have right here this Ultima TheoTheta small portfolio. What is that? That is for people that are starting with like $2,000 accounts, okay, $5,000 accounts. Look, this is a trade that I literally did yesterday, okay? This is the trade and the hedge. Both of them are in there. And then the MES, which is the micros. This is the trade that you just saw inside of my account, okay? This is the trade that was texted out to the masses. And again, the way that we text out, we even give you the format. I'm even going to show this on here, okay? Because I think it's important that people see exactly what we're doing, okay? So it has all of the verbiage to be able to text out both trades, right? You get to see everything that we do. And I'm adamant about that. Look, what our members are doing year to date. Thank you, sir. Scored 300% on one of these flies today. TheoTrade is bar none the best education platforms on trading I've come across in a long time. Keep up the good work. This one actually comes in, couldn't be more recent. I'm up 80K since January 1st, 2022. Okay, it's huge. All right, some of the characteristics of selling Ultima Premium. Obviously, we're selling high probability. You never have to buy or sell the stock. Risk can actually be dialed in to precisely your comfort level. You're not going to use a stop order. You can vary time frames and minimize your risk. Probability of profitability is incredibly high. It's also a perfect strategy to enhance one's stock portfolio. If you still have a stock portfolio, it's an excellent tool, okay, if you're seeking returns to build an account. And new products allow for the sale, okay, of options in nearly any account size. And I always stress just that. Now, you got to learn to build a portfolio of options. And I don't want the option side of this to intimidate you. One of the things I say about options all the time, options can be the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market. But if you don't know how to utilize an option correctly, you can lop off a couple of fingers. Like what we're teaching here with Ultima, this is powerful stuff. I don't want you to think though, I do not want you to think for a second, we're out there selling option premium naked. If you sold option premium naked, you'd be in trouble. Right now, look how fast this marketplace is moving. Okay, this is insane. This strategy over here, okay, the P&L, let's move $7. But still my heart, these things don't move. The only thing that moves the P&L is time moving forward. This is what we term net neutral. There's almost no directional risk in this strategy. If you look at my other account, and I'm going to tell you right now, this account's got some risk on. Look how many positions I have in here, okay? My positions, look at this. Like the markets are unchanged right now, right? My positions, okay? I show everything, every P&L. I was just down $3,600 less than 20 minutes ago. What am I now? Massively unchanged. Serious. You can't, just look right here at net lick. Yesterday, okay? Yesterday I had a good day. I was up about $4,000 yesterday. Today, I'm massively unchanged. But I'm going to get on the right side of this as the marketplace actually backs off. This volatility is a good thing. As I say to people, like, it's no holds barred here. I don't care whether I'm down $3,000, up $3,000. You got to be able to see everything. You got to be able to see my good days, my bad days. And that's important to me. Okay. But every single position that you see in this account, every single position that you would see, okay, here's another IRA, everything you get to see. Every single position that I have over here in Tastyworks, you get to see. We've got portfolios for it all. Okay. Again, use this stuff correctly. You make some money in this market. Okay. You can sell premium. Don't let options intimidate you. The one thing that I stressed you on here, again, you're going to need to do something like this for the foreseeable future. Okay. We can show you how and when to sell option premium in a matter of a few hours. all right? But what you're really, what people come to TheoTrade for is not so much like, hey, this is selling an option, this is selling an option. What you come to TheoTrade for is detailed recipes for every strategy, including Ultima premium selling. It's just like, you wouldn't bake a cake without a recipe. Why do you trade without one? So this is what you need to know to successfully sell Ultima premium for a living. What underlying stocks or indices make the best Ultima premium selling candidates? What did you guys see in my portfolio? Okay, serious. I don't mind going through some of the criteria. When I say criteria, this is the recipe. Okay, what's the recipe? Well, I traded SPY. I traded some QQQ. Okay, you saw some ZB, which are some bonds in there. You saw some S&Ps. My portfolio didn't go that much beyond this. I had some Tesla. By the way, I was screwing around with Tesla, Ross. Okay, I'm just talking to somebody in the chat over here. I was just kind of screwing around with Tesla. Okay, I thought that would be a good explanation because it was actually very risk averse in a high risk, product. But those are it. If somebody said you can't trade more than those 4 products for the rest of your life, okay, I'm fine with it. By the way, when I traded in Chicago, you know how many products we predominantly traded? 1. I mean, we were experts in, S&Ps. That's what we did. So what volatility should I seek out? Now, wait a second. What underlyings are you going to use? I showed you that, but then the volatility has to be right. One thing that I caution people on, okay? Too much volatility, and you're in trouble. Too little volatility, you're also in trouble. Like, I don't think I'd be selling premium in Walmart. Okay, Walmart's a 20 vol. Okay, the VIX is higher than Walmart. The VIX is higher than Walmart. I'm not selling premium in Walmart. It's not going to fit the criteria. And I want you to know that. But at the same time, like right now, like Tesla's not going to fit the criteria. You got to understand that criteria is like a sand sifter. So if you start with a pile of sand and kind of shake it down, you're going to be left, okay, with, well, what's actually viable. The criteria is leaving you with what's viable. So what volatility should I seek out? What options expiration do I select? Oh, this is a fun one. Let's actually cruise into an options chain here. Specifically, let's go to the SPX, the mother of all products. In the SPX, look at this. There's daily option expirations. Okay, there are now hundreds of different options to select from. You've actually got to fine tune and peg right to the right expiration. Now, I told you right now, it's going to be further out in time. Expiration, it matters, right? What should be the delta of the option I sell? We got to give you the probability of the option you should sell. What option should I buy against the position? This is the hedge, okay? How do I build the position? And what I mean by how do I build the position, nobody seemed to question this, okay? When you went out, and I was talking about selling some stuff here and selling some stuff here and then laying a hedge in here and this one right there, okay, was the VIX. Remember that a moment ago? How many VIX vol spreads do I need for this? How many VIX vol spreads do I need? How much hedge do I need? That's the kind of stuff, okay, that we teach, right? Do I need a large amount of capital to do this? Absolutely not. What's the right amount of risk for me? We can dial that in. You can actually say, hey, look, I have a $10,000 account, right? I'm actually a little bit of a risk averse person. I get nervous just thinking about, risk. All right, well, this is how you dial it down. Hey, you can say I have a $10,000 account, let it ride. I want to really rock with this position. Okay, we can open up the position a little bit. You can actually dial in risk, and we teach you how to do that. What are the percentage returns supposed to be? What's the most frequent percentage return? 50%. How do I protect myself from market crashes? Okay, you use things like VIX volatility spreads. We're going to use things like there's one thing you guys will hear, like all kinds of stuff about TheoTrade. You'll never hear of somebody getting killed here in positions, ever. Want to know why? Because that crap does not happen here. Why? We reduce risk. All right. Maybe my returns might not be as high as some guy that's just like YOLO, which is you only live once, bet it all. Okay. They might beat me on returns. I don't care. I'm still going to be here. Okay. I've been here for almost 25 years in this business. I'll be here for another 25 years in this business. Okay. I'm about consistency. I'm about just hitting singles and doubles. Okay. But I'm going to be here and I'm actually going to knock returns every single year. All right, let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading, okay? Trading is always about answering what ifs. What might be a good stock or ETF candidate to sell premium? What's the correct options expiration cycle? How much capital do I commit to generating premium? What strike options do I sell? What strike options do I buy? How can I limit my risk? We have the answers. So we build recipes with definitive criteria. They're actually checklists for each unique strategy and each unique variable that you're going to encounter. The whole idea behind criteria here comes from if you actually hopped into a plane. Okay, some of you, anybody here still fly around? It's horrible now, but if you do fly around from time to time, if you get into an airplane, the pilot, okay, he doesn't just hop into the cockpit of a 737 and go, let's go, throttle up, and we're out. They sit there, the pilots sit there, and they go through a highly detailed checklist. It's no different here. Okay, it's no different. In fact, I laid out the checklist very similarly to a pre-flight checklist. But then even more importantly, the pre-flight checklist is pretty simplistic. You know, you go through and you sift through a couple of ideas over here. This is the right probability. This is how many hedges. Boom, you got your position on. The more important aspect of our criteria is what to do in flight. What can happen to you once the trade is on? What if the stock goes up? What if the stock market goes down? What if we crash and burn? What if dividends are coming? What if it's expiration? It's triple witching. Oh my, there's a dividend payable on triple witching in the spiders, and I have positions on, and you're ripping hair out, and there's expiration coming. We cover all those variables. We cover all the odds and ends. All you have to do is know, what if we're going up, what if we go down, if time moves forward, if volatility explodes. It's the variables that you're going to encounter that get people in trouble. Okay, we have the answers to the questions, the right probability, how many option contracts for the account size, when do you close the premium sell, what if we sell off big, do I bail out of a trade, what if we rally massively, can I fix a losing position? It's about how, it's about when, it's about why, it's about what price. And I'm going to tell you right now, that is just the beginning of the variables. Like literally, that's scraping the surface of the variables that you're going to face while selling Ultima options for a living. Listen, you can read about what selling options for a living is. Okay, you can Google this right now. When I say Google it, like literally, you could Google selling options premium. 10,000 pages are going to come up. Okay, maybe you even know how to build a few trades. But I'm going to tell you what's not going to come up in any of those Google searches. Okay, criteria. You're going to need TheoTrade's recipe for success. 20+ year trading experience. That's just me. We have 7 other full-time instructors here at TheoTrade. I had access to client order flow for 15 years. We viewed and studied millions of trading accounts. That's what we did to build education at TD Ameritrade, right? We literally looked at people's trading accounts, what works and what doesn't. Again, we ran education for 15 years of a firm with the largest order flow in the entire industry. That's where the criteria originates, and criteria is the recipe for success. The following strategy and corresponding criteria requires the utmost attention to detail. We literally spent years fine-tuning the criteria, the setup, and when you approach the section, when you approach the section on criteria, you follow the steps to be able to build a trade. We built a 5-hour course, the Ultimate Income Generator course, right? It is ready to go. It's in the can. Before I go any further, it's not $500. I am not here, and I want to make this clear. We're not here to sell a class for $500. We do not do that anymore. I want to explain in just a moment of what we do here at TheoTrade. Before I get there, I tell you right now, it's not $500. You're not going to plunk $500 down on yet another course. Ultima is an entire system. I happen to be the trade instructor for this one. Now, we have 7 other instructors that also build courses. This one, though, this is kind of my baby, and it has been for the last 2 years. The 5-hour course is archived. It's available immediately for streaming, 24/7 access, download capability. You can even watch it on TheoTrade mobile when you're offline. By the way, you can watch any of our stuff on a mobile device. You can watch our stuff, on a desktop, a laptop, whatever. If it runs, you can actually, download the class, or you can just stream the class, whatever works for you. We are set up very similarly to how Netflix technology is set up. Now, the class slide deck, that includes all the entry exit criteria. It's the checklist. It's available immediately. So I'll talk a little bit about what TheoTrade is and the Ultima Income Generator system, and then I'll explain to you about how to go about, for instance, downloading the checklist. And before I go any further, I'm going to tell you right now. So I spent 15 years building education at thinkorswim and TD Ameritrade, and I've seen everything, meaning like I've seen every education firm out there. I've seen classes that cost $24,000 for an 18-month stock market education, right? $24,000. But you know what? Still, that's relatively inexpensive in comparison to going to college these days. You know, you go to college, we actually have a college professor that works here, Jeff Bierman. He also is actually a professor of finance at DePaul University. He's $42,000. Okay, $42,000, insane, right? What we do here at TheoTrade, though, I say it's very different than any other educational venue. Okay, we provide you everything that you're going to need. All right, from the time you actually join TheoTrade, okay, forever. When I say everything, we provide you everything. For example, and I'm just going to throw this up here. Okay, from the time you come into TheoTrade, we actually give you, all right, not only the class, trade alerts. So you're going to be bombarded by trades. So that's part of TheoTrade. You don't have to pay extra for that. That's just part of TheoTrade. Okay. Another really viable thing, email access. Email access to who? All the instructors, including myself. You get yourself into a nasty position, you don't have to email me hypotheticals. My dog's sister's boyfriend got themselves into a bad Apple trade. Just come out with it, right? Right. Listen, most of us have been licensed in this business for the better part of like 2 decades. So please just come in and say like, hey, I'm in a really crappy position. Can you give me some help? We give you trade alerts. We give you email access. We give you access to every class. We also give you a live chat room. Okay. It's a live chat room, 6.5 hours a day. It's just in your face. We're constantly trading with you. You don't have to go in there, but if you don't want to email us, you can get in the live chat room. We can answer questions in real time. Okay. And we give everything you're going to need to be able to trade, everything you're going to need to be able to be involved in this business, trade alerts, email access. Okay. We have multiple different portfolios. There's actually 5 different portfolios that we have, access to, the email access, the chat room here. But we also give you access to all of the archives. Every class we've done, there's over 100 different classes in here. I'm going to explain all of it here momentarily. Okay. But we give you access to all of this, okay, for 90 days. All right. It's $297. And that's it. And you go, that's it. By the way, this is not an introductory class. It's not an introductory price, not introductory class. There's none of it. That's not what we do here. That is also not a membership. After 90 days, if you want to do this again, you pay another $297. We have 6,000 individuals now on TheoTrade. Okay, it's a really different way, I think, of doing business. We give you everything you're going to need to trade, okay, to learn, to actually follow us into trades over here. 90 days is $297. What you're about to see in a moment, okay, there's a full money back guarantee. I'm going to actually display that in a second. I will take you through everything that's in TheoTrade momentarily. Before I do so, this is the class that you're here for. You're going to learn how to generate consistent returns with selling options premium. It's the Ultimate Income Generator course curriculum. You're going to learn how to build a portfolio of high probability trades that generate consistent monthly returns regardless of market direction. Okay. More specifically, you're actually going to learn the detailed entry and exit criteria that's actually going to mitigate risk. You're going to talk a little bit about the option Greeks. You can learn how to manage positions through one easy number. You're going to learn to use the risk array. Hands down, my favorite part of the Ultima class. The first time people actually see the risk array, the jaw just drops to the floor. The risk array, for those of you that don't know this, okay, it's like the most feared thing. Dun, dun, dun. Okay, this is what we term a risk array. Okay, when I say a risk array, you're like, what do you mean? The risk array. What do you do if the market goes up? What do you do if the market goes down? The most feared area. By the way, you don't have to have thinkorswim to be able to do this. There's risk arrays on almost every platform now. How to properly allocate in a way that reduces risk. Discover risk mitigation techniques designed to even hedge the most extreme market environment. You're never going to get caught off guard. Like, you're going to know if the market crashes, this is what I can make or lose. If the market explodes higher, this is what I can make or lose. Okay, how to sell premium in small accounts or retirement account with innovative new trading vehicles. There's an entire subsection of this class that just deals with small accounts. It just deals with people that don't have $100,000 tied up, for margin. We can actually do this with $2,000. And again, the subsection of the class teaches exactly how to do that. In addition to the Ultimate Income Generator course, we're also going to give you inflection point spreads. Inflection point spreads is an add-on class to it. It's 3 hours. And the reason I did this, the market's just getting more and more volatile in 2022. I was like, we need something easier, cleaner, because you don't want to place the VIX trade and then place the other trade. So you can do this all in one nice little compact trade, right? This is included in it. You're going to learn to sell premium and hedge risk in one transaction. So it's bam, it gets put on at one time. Create high probability positions, okay? Discover how to hedge existing positions, even in the most extreme environment. Markets could be tanking. We can show you how to reduce risk like that. Detailed criteria for inflection point spreads. Learn how to analyze inflection point spreads so you're never going to be caught off guard, okay? And how many inflection point spreads can you safely allocate for any account size? Look, with all of this, and I'm going to explain what all of this is, just the Ultima and the inflection point spread class, okay? That's enough. Like there's a lot of places that would charge thousands of dollars for this, okay? It's $297. And with the $297, and I want to make this really, really clear, okay? It's $297. And with the $297, there's 90-day money-back guarantee. And the $297 is good for 90 days, okay? Again, after 90 days, you have to say, I want to do this again. We never bill you again. We don't auto renew. We don't do any of that. This is not like a gym membership where you're like, I have to give blood to be able to get out of the gym membership. We don't do that. Money back guarantee. If you're not satisfied, if you're not satisfied in the next 90 days, just email us. Okay. One thing I want you guys to understand about the money back guarantee, there's absolutely no stipulations. We don't care. It's $297. We have 6,000 people on here. The one thing I implore you to understand about TheoTrade, listen to me. We want people that want to be here. We want people, okay, that want to actually learn this business. We want people that actually strive to be like, hey, you know what? I'm actually going to learn this crap. I'm going to spend the time. I'm going to put in a little bit of work for it because you do, okay? But at any time in the next 90 days, listen, I get it. Sometimes life gets in the way. There's no excuses. We don't question you. You don't even have to call us, okay? There's no commentary needed. You don't have to say that, my sister's wife's dog died and now I can't, do this thing. That's fine, whatever, okay? I don't even like if like it doesn't make a difference to us. It's $297, right? No excuses, no questions, just email us. It's one email to support@theotrade.com for a full refund. Again, it's $297, okay? We're not gonna be crying. I hope that if you do leave, we part on good terms. What's funny about TheoTrade? Okay, anybody that leaves, they always come back, always, because you can go out and you can spend, I don't care if you spend $50,000 on stock market education, it will pale in comparison to what we do here. And that's why we do this. We're like, hey, it's put up or shut up. So that's it. It's 90 days. It's $297. If you don't like it, there's no stipulations to the money back guarantee. You don't have to do a little dance. You don't have to make a little love. You don't have to get down tonight. Okay, we just give you the $297 back at any point in the next 90 days. And I know there's people that are always like, I'm going to watch as much of the classes as I can in the next 90 days. Do it. Binge watch. Stay up 3 days in a row. Drink as much caffeine as possible. Do it. Because there's nothing else like what we do here at TheoTrade. All right. Go to theotrade.com/skew. In fact, I'll take you over to this site right now. Go to theotrade.com/skew. And I'm going to show you something. And then I'm going to explain everything that's incorporated in this. theotrade.com/skew. Skew is S as in Sam, K as in kick, E as in echo, W. theotrade.com/skew. It's $297. When you click add to cart, by the way, this is everything that's included in here, which I'll go through in a minute. When you click add to cart, another page is going to populate. Okay. Name, address, yada, yada, yada. Put your phone number in. Your phone number will automatically enroll you for text messaging. And we're not going to bombard you. In a busy week, there might be 5 text messages. In a slow week, 1 or 2. Okay. We don't need to send out 1 million text messages. A lot of the stuff we do is hands off. By the way, you can do $297. You do 2 payments of $149, 3 payments of $100. We don't care. Okay. We try to make this as simple an entry point for everybody. Okay, you do and should have $2,000 though in a brokerage account. All right, so you should have $2,000 in a brokerage account. I don't mind saying that, okay, because that's the truth. The way you can ask questions in the webinar chat, you can ask questions directly on the site. When I say you ask questions, You can come in here and say, Jeff Roth is the support agent. You can actually chat with him right now. Okay. So right on the page over here, we even got a sales number if you were so inclined to want to call that. But anyway, let me actually show you everything that's now included in TheoTrade. You can start enrolling for it right now. By the way, we will let you know that you've enrolled. As you're enrolling, we'll just read off your first name, okay? And maybe where you're from. Like, I don't mean like, home address, but like, like John from Pittsburgh, theotrade.com/SKU. Again, how our members are doing year to date. I want to thank you for all the different staff and point of views in trading this year. I did more of what works and less of what didn't. Thanks to your selling premium and in IPS. By the way, IPS stands for inflection point spread hedges. I took $12,000 to over $32,000 in 18 months. Okay, I've been doing your method. Thanks again so much. Look forward to your new ideas in the coming year. All right, this is really obviously very recent. Now, to include everything here at TheoTrade, all right, TheoTrade goes beyond one class or indicator. We understood that, like, when building TheoTrade, people want to trade and invest. They want everything at one place. They want to do it at one price. So here's everything that's included. We have a quick start beginner's video guide. Some of you are starting from absolute novice. If you're starting from novice, this right here is the start here menu. Options 101, 201, 301. All I am showing you right now, this is how you get started, get ramped up. By the way, this is all part of TheoTrade. Like, you don't pay any more for anything I'm showing here. That is so important, okay? Everything that you see here, okay, is something that's included in TheoTrade. It's totally overkill. But my thought process for $300, I think you'd still rather be overwhelmed rather than underwhelmed. Like, again, I can't stand when somebody sells a class. How can you sell a class for like $500 and be like, here you go, get out the door and go make something of yourself, right? This is much more systematic. Like, we get it. Start here. Options 101, 201, 301. Okay, then we get to some crazy stuff, even for those of you that are experienced. Order execution. How good are you at executing orders? Okay, one thing, I'll put money on it. 1, part 2, and part 3. You watch that 3-part series, okay? It'll save you thousands of dollars a year in how you actually send your orders. That's what order execution. Crash course and option geeks, what products to watch and why. There's a lot in there. That's just the start here menu. So that's the bonus number 1, right? Quick start guide. Bonus number 2, we give you access to every class we've ever done. What do the classes look like? Well, bring it up a little bit, okay? So in terms of the classes, so here's how the classes are laid out. First of all, okay, it's Jeff, Matt, Corey, Blake, Tony Rago, Slim Miller, Brandon Chapman. Classes are option classes, option newbies, technical analysis, futures and bonds, stocks, day trading, okay, hedging. We even have mindset, okay, pairs trading, trend trading. They're all part of it. Now, I'm your resident options geek, okay? So the resident option geek, Catapult. Oh, by the way, Catapult, talking about new classes, I just finished that yesterday. So you want to talk about, you get access to this. I just did a new class yesterday, Catapult, right? So I finally finished it up, the Q&A session of it yesterday. That's Catapult Q&A yesterday, right? This one, it's the beast. I actually took my sweet time in doing this one. They're just 30-minute segments, okay? But the Catapult is the beast. So that's the latest, it's the latest play. By the way, Catapult is Ultima. So inflection point spreads, Ultima, income accelerator, they're all variations on the same theme, because here's the bottom line about Ultima, okay? Fix that camera. That's the crap that works right now. You get access to every class that we've done. And I want to reiterate this. Every class that we've done since we started TheoTrade, okay? Every class that we've done. This is just the option side of it, okay? So for the next, that thing will not work. For the next 90 days, you go ahead, you binge watch every class that you want to, right? Is that enough for you? Okay, that's just the options classes. Technical analysis, it's all in here. Okay, so that's bonus number 2, access to every class that we've done. Okay, bonus number 3, get access to our chat room. Okay, you're like, what? Yeah, there's a chat room. Okay, I know places that charge $300 a month just for the chat room. Click right there on member chat room. You know what this is? This is Tony Rago. He's a day trader. He's live right now.
These channels, and that's all those rotations.
Okay, that's actually, I'm letting you listen to them for a second. You can actually see, all right, rally play was 385, 38.50 was the deal. So they're actually highlighted. These are trades trying 46 long. Basically, he's buying the 46 handle, okay, buying 56 back through. He's actually telling you exactly what trades he's executing, and you get to see him execute in real time. By the way, that's just one instructor. We do 6.5 hours a day inside of the chat room, okay, and we have email access to the instructors. There's one thing I'll tell you about this. For $300 just over the next 3 months to be able to email us is worth it. Okay, it's worth it. You have nobody else to talk to these days. What are you going to do? Hop in a Reddit board and be like, "Hey guys, guys, guys!" You know, who are you going to talk to these days? You're going to call up Charles Schwab? You know, talk to Chuck. Chuck ain't going to tell you a damn thing anymore. The regulators have cranked down on the brokerage firms. They can't even talk to you anymore. It's one of the reasons we built this business. We built it because there's a need for it. Nobody else does this stuff. Nobody on the education side is willing to answer emails. We are, okay? What good are we if we can't actually answer questions about our own strategies and our own trades? So we get hundreds of emails every single day, okay? We're designed for it. Most of our guys answer 4 or 5 hours of emails a day. We're designed for it. That's what we do here. So please, shoot us emails. That's what we're here for. Here's the instructors: Jeff Bierman, Matt Williamson, Corey Rosenblum, Brendan Chapman, Steve Slim Miller, Tony Rago, Blake Young. We have 3 CMTs on staff. There are major, okay, brokerage firms that do not have 3 CMTs on staff. Brendan Chapman's a CMT, Corey Rosenblum, that's a chartered market technician, and Jeff Bierman. Jeff Bierman is also from TD Ameritrade. He built most of the thinkorswim charts. Jeff Bierman is also a finance professor at DePaul on the side. Onward and upward, this is all of us working from home. We give you access to every proprietary indicator and scan. We build scripts that we like to use, indicators, right? Okay, so if you come over here, we cruise in here, and these different indicators like this is expected moves. Okay, I can come in here and use like what's called Quantix. Okay, these are indicators that we built, auto expected moves, all right, implied volatility ranges. We give it all to you. Every indicator that we build, we turn it over to you from day one. It's on the site. It's another $2,000 in value, okay? And you, by the way, once you download the indicators, even if you get your money back, we still can't, stop that. It is what it is. Bonus number 4, the TheoTrade Live portfolio. Now, we showed you the portfolio already, okay? But if you're so inclined and interested in the portfolios, we come into the TheoTheta portfolio, and there's a TheoTheta small portfolio. What's the small portfolio? Small portfolio is for smaller account size. Okay, it takes a second to populate this, but this is everything that we do in terms of the trades. You get to see opening positions, and then down below the closing positions. Okay, we kind of separate it out. It's nice and clean. You get to watch me trade like never before, and it's completely no holds barred every position I take. Opening orders, closing orders. Okay, if you do not have time throughout the course of the week to update yourself, I do a 12-minute video every Friday. I'm going to reiterate this. We do a 12-minute video on a Friday that updates you on every position that we take. So if you can't log in, if you can't tune in at all during the week, it's fine. It's fine. Like all of the Ultima trades, the in-out spreads, and gamma iron condors, we update all of it inside of a 12-minute video. Okay, you have access to that. Bonus number 5, the technical analysis toolkit. Okay, there's literally Tech 101, 201, MACDs, 21 other 21 other technical indicator and analysis classes in here. Bonus 6, the day trading treasure chest. That's a fun one to say. Again, we have just shy of about, I think 14, there's 14 different day trading classes in here. In fact, what you just saw a moment ago was Tony Rago trading live. Okay, if you're going to trade on an intraday basis, that's day trading, I highly suggest listen to what this man has to say. So that's bonus number 6. Bonus number 7, mindset mastery. Here's one where I say time out. Write this one down. Even those of you that are experienced, serious, go watch the 5 essential building blocks to successful trading. Write that down because you'll forget about it. It'll change, okay, your entire mindset on how this business works. Okay, hands down, it's one of the best courses I've ever actually listened to. And I'm not here to, plug our other guys at all. I mean, Slim Miller, I've known that guy since I'm a kid. This is one of the best classes that anybody's ever put together in this industry. Okay, and you get access to it from day one. You can watch it tonight. Bonus number 8, the quick start guide to Ultima trades. For those of you that are experienced, we built a quick start guide to allow you just basically to open up a quick start guide, like a PDF file. It's like if you bought a new printer, how do you get that printer to work quickly? How do you get Ultima to work quickly? Quick start guide will get you there. Listen, again, what our members are saying. Thank you for the reply. It's very much appreciated. TheoTrade is the first educational trading service that I'm actually making a profit with, and one which I can see a pathway to retirement. Look, we do everything. Classes, coaching, email access to the instructors, live trading room, indicators and scans. We give you mobile access, through any mobile device. By the way, I'm Apple, but you have Android as well. Everything you're going to need to succeed, we've literally built the Netflix for traders. It's $297 for 3 months, okay? With everything I mentioned, TheoTrade.com/SKU. I'll reiterate once again, it's a completely riskless trade. 90-day money-back guarantee. Email us anytime in the next 90 days. Now, how much could you watch in 90 days? A lot, okay? Course a day for the next 90 days, and you still wouldn't even have half of it down. We have every word that we've ever spoken on TheoTrade since 2016 archived and recorded. It's all searchable, okay? All like deep indexes. It's awesome, okay? If you get a refund, you receive a refund, keep bonus number 1, which is the quick start guide on us. You even get to view the inflection point spread class. Listen, get into TheoTrade now. We'll work with you directly. Here's the part where we really incentivize. The first 30 people and the first 30 people only to enroll today, okay? Those are the ones that get the money back guarantee. There are 30 spots on the riskless deal. So it's the first 30 people to enroll. Obviously, some of you are already enrolling as we are speaking over here. Listen, we give you unlimited email mentoring, right? We let us, send us your trades. In fact, I, urge you, send us your trades. What I mean by send us your trades is send us your trades. Like, hey, if you have questions in the trades, let us know about it. And the $297 riskless offer, it's never been available with Ultima, inflection point spreads. There's no stipulations, money back guarantee. Okay. I'm going to answer a couple of questions here, but okay. Because of TheoTrade, I closed my entire portfolio with profits, 0 loss, I'm all in cash. All right. My closed year-to-date profit with Ultima Trades has paid for my yearly TheoTrade subscription. Comes from John. All right. Everything that's yours today. Ultima, quick start guide, over 100 different trading classes, access to the chat room with email access, the TheoTheo live portfolio. Okay. Technical analysis toolkit, the day trading treasure chest, the mindset mastery with Slim Miller, the quick start guide to Ultimate Trades. As I said, TheoTrade.com/SKU. I will pop that one up there once again. Click over here to add to cart. Okay. By the way, as this comes up, don't forget, put your phone number in and select whatever payment. Just know that there's a full money back guarantee on that one. Again, what our members are saying, my first 4 trades following exactly the details in your Ultima class just closed out using GTC, that's good till canceled orders, set right after getting into the trade. This paid for your class in less than a week. I'm very thankful I subscribed to your services. Keep up the good work. Comes from Jeremiah. If you go to this link, at the very bottom of it is where you'll find the auto expected move indicator. Again, the auto expected move indicator. I like what somebody said in here, Peter. He's like, I got to get the coffee pot started. You think I'm drinking this for, man? Okay. This is caffeine dose number 2 today. You know what? Somebody said, how about showing the return on margin? Okay. So that's actually very interesting that you say that return on margin now is absolutely phenomenal. I'm going to answer a couple of questions, but then I'm going to get very specific questions. Return on margin, it's absolutely phenomenal today because you use options on futures, which are actually span margin. If you know anything about span margin, it holds 1/6. Okay, this holds 1/6 the margin, if you will, of FINRA or the SEC margin requirements. So this is 1/6 the margin. So the return now is absolutely phenomenal. Okay, it's absolutely phenomenal. Now, would I suggest a small account do this trade in Tesla? No, I would not. Okay, Tesla, by the way, is completely out of the ballpark these days because the volatility is through the roof. But trading S&P options on futures, the return, okay, the use of capital here is phenomenal. In fact, I'll show you a much bigger trade. Okay, if you're so inclined. Okay, in terms of the big boy trades, you want to see a better use of capital. Look at this. This is S&P options and futures. I'm tying up $6,000. It's a really, really small trade. Okay, but I say it's a bigger trade. Look, it's just a 3 lot, but it's collecting $50 a day, only tying up $6 grand. You're like, oh, that's not that much. Okay, that $50 a day is paying for all of these other trades. So it's basically this ES trade is financing my directional bias in Apple, my directional bias in Amazon and Caterpillar. This new Catapult thing, you guys are going to love. Okay, I'm tying up $6 grand, all right, to get a free ride in all of these other products. It's again, it's a brave new world out there. How you use your money is critically important to me. Okay, listen, I tell you, there's no holds barred here. You can ask any question you guys want, and I'll show you directly. This is what we do. This is why we do it. This is the best use of your capital at this point in time. All right. This is another email. It comes a little longer ago, but okay, obviously can't speak for my classmates. Going very well for me. I wanted to get some of the generalized questions in here. Listen, people always ask general questions, so let me get through it. What do you need to get started? You need a laptop and internet connection. Frankly, you don't even need a laptop anymore. You can actually do almost everything over an iPad or any Android tablet device is fine. Okay, the one thing that we impart upon you, okay, when you pay $297, I want you to understand you get everything you're going to need to trade, to invest, from novice to absolute, extreme trader. Like that's what we do, here at TheoTrade. So you're not going to have any of these, wild expenses. You don't have to go out and buy the latest, greatest, iPhone, or you don't have to go buy a brand new tablet. Like most of you, if you're listening to this right now, you can access TheoTrade and do anything we can. All right, number 2, this is not a membership. We do not auto renew. Okay, you pay $297. $297. All right. After you pay $297, what do you got after that? All right, nothing. All right, absolutely nothing. That's it. If you want to do it again after 90 days, you decide at the end of 90 days. All right, we're now providing TheoTheta weekly update, and that is a 12-minute video that is actually shot. The 12-minute video is actually shot on a Friday morning. It'll update you on all the moves we can make. Nothing we do is like all that time sensitive. There are definitely trades that I'll place that you should probably try to place that day, but nothing we do is incredibly time sensitive. So be aware of that. So even if you catch the video at the end of the week, you can usually go back, kind of, copy some of the trades that we've done. All right, number 4, we archive everything. Every word spoken here since 2016 is archived. If you can't watch it, don't worry about it. You can watch the recording. In fact, we even give you access to TheoTrade Mobile, which you can download, and you can even watch TheoTrade Mobile and speed it up. So you can watch me at 2 times the speed. I sound like a chipmunk. It's good stuff. Next on the docket, just give me 1 second here. So next in the docket here, we're going to provide you access to TheoTrade Mobile. Oh, add your cell phone number. I've already mentioned that a couple of times. Add your cell phone number. You're actually going to get text messages. Download TheoTrade Mobile for push notifications. So if you cannot receive a text message, which some of you can't, depends on where you are. I saw somebody in here a moment ago. It was in Canada. So if you're in Canada, you can't necessarily get push notifications, or you can't get, text messages. You can get push notifications pretty much anywhere in the world through our mobile device. It's one of the reasons we do text messages and we do push notifications. So add your cell phone number. Okay, get text messages. If you can't do that, you can also do push notifications through the mobile application. All right, you can email us anytime, and receive a response within 24 hours. One thing that I do throw out to each and every one of you, okay, is simply this. When it comes to email access, please do not email us on a Friday afternoon with 5 minutes to go to the close and be like, I need help. Okay, just ease up. All right, ease up on me there, because we trade, and it's important that you know that we trade. You got to give us like a day. Most of the emails, like support emails, usually our turnaround time is 15, 20 minutes on most emails. If it's myself, I usually answer emails, okay, in the early morning hours. So if they come in during the trading day, sometimes I may not even catch them till the evening or the next morning. Give us 24 hours, we'll give you the answers you need. The other thing I'm going to tell you about email access, okay? The other thing I'll tell you about email access in here is that if you're going to have a problem in trading, try to get ahead of it, right? When I say get ahead of it, get ahead of the problem. Like if you know that you're actually got a position that's going against you, the faster you can actually send us an email, the better probability we have at actually coming up, okay, with an alternative like exit. All right, number 8, you're going to gain access to every course, everything that TheoTrade has done, okay, since inception. It's not 5 years now, it's 7 years. So classes, coaching, live trading sessions, everything's searchable. Every archive is searchable, okay? It's all part of it. Variations of all the trades that we do are available inside of an IRA. I am very, careful to include IRAs. I use my IRA while I trade. In fact, if you take a quick glance, this is a SEP IRA. Just to make a quick point, if I were to load up a trade here, just want you to see this. If I load up a trade, it says SEP. Okay, it's a SEP IRA. So I have a SEP, okay, and then this is another type of account. It's called a portfolio margin account. All right. So both of those are completely available. So I am very, very IRA centric in there. All right. Next over here, we can help you get approved for options at several major broker dealers. So at any point in time, like if you have any issues with your broker dealer, they say, hey, you can't do this trade here. We got you covered. We'll help you out. Remember, there's 30 riskless trade spots available. Get results, take action, enroll for TheoTrade now. Go to TheoTrade.com/SKU. I'm going to wrap things up there. I see a couple of questions popping in over here, but okay. I just want everybody to know Ultima alerts are included with the service. Okay. We send out entry, okay, opening trades and closing trades with that. I think that's pretty realistic in here. Sorry, I'm just looking back at some of the questions that were in here. And a few of the names, JP from California, Mary C from Wisconsin, okay, JR from Virginia, okay, and Tony P from California. I apologize if I butchered your name there. Giovanni P from New York. It takes me about 7 to 10 minutes before I actually see some of the names populate in here, okay? And again, I just want to read back. I think we've actually got most of the questions actually answered here on a one-to-one basis. So we'll keep typing away a few answers to you, but I want to thank each and every one of you for coming in here. Go right here to this page. It's TheoTrade.com. Again, TheoTrade.com/SKU. I'll leave this up here, TheoTrade.com/SKU. Okay, get you guys enrolled for the Ultimate Income Generator class, but access really to everything we do here at TheoTrade. Thanks everybody for tuning in today and have a wonderful afternoon. Bye-bye.